He's a real estate developer. He wants rates lower, and we're dealing with a significant amount of debt in this country, and it is much more beneficial for rates to be significantly lower. How do you accomplish that? Increasingly becomes the question in one supply chain shock after another that really does challenge the discussion, even though we are having disinflation on other measures. So it is a complicated economic discussion that has been brought into the mainstream by President Trump and produced in utterly dramatic fashion so that everybody can really play a part in this bachelor Fed style.
And he was fanning the flames throughout the entire year and into this year. I mean, I was in the Oval Office that morning when there was reports that maybe he was going to fire Jay Powell. And that was really just mostly about the fact that he didn't think he was doing a good job, less so even about what was going on when it comes to the refurbishment. Then they went to the refurb. Remember, this was a president who went to the Fed, sat behind alongside the chair, looking at all the work that was being done at the Federal Reserve. So there's been a lot to this story.
I believe we've reestablished that connection. And at risk of offering any fuel to conspiracy theories, I hope Esther George is still with us. Esther, we want you to complete your thoughts on the future of Chairman Powell and why this moment is so different.
Well, it's different, Jonathan, because, again, we have not seen this kind of political angst around a transition of leadership in the way that we have now. And of course, this follows on a long period of badgering of the Fed about its interest rate stance. And so it creates an environment right now that is unusual. Having said that, though, the institution, I think, is quite capable of carrying forward during this transition. And really, as I think about the committee and what they're doing this morning, I suspect they are squarely focused on the economic challenges and deciding what their stance of policy needs to be.
Couldn't agree more. Esther, it's good to see you. My apologies that this one's a bit of a short one. We'll get you back on the schedule soon and we'll catch up. The former Kansas City Fed President, Esther George, on the future of this institution and the focus on the Fed later on this afternoon, which unfortunately is not just about policy, the outlook, the economic challenges. It's also about the future of the chairman of the Federal Reserve.
I like what she did there. She said it's a committee, and she kept emphasizing the committee. And at what point do we have that emphasis rather than on one person who is the head of that committee, but ultimately is really held to the consensus vote of 12 individuals?
Right. It's a deliberative body, which is why people say, well, if Chair Powell stays on, he's just one person. But at the same time, he was the head of this institution. So if he stays on, doesn't that make it a little bit more complicated if Kevin Warsh comes in and wants a quote-unquote regime change?
I go back to two words, transparency and finality. It doesn't really matter what I think about any of this. I think the chairman set up his own metric for whether he can move on or not. He said it needs to be wrapped up with transparency and finality. And based on that metric, I believe where we are right now falls short of that bar. So it'll be interesting to see how the chairman navigates that later this afternoon.
Yeah, maybe he'll have a technical difficulty and just freeze.
Just cut off the news conference.
Everyone just has to leave. You know, there are different ways to handle this.
True. Just pull the plug.
See. Yeah, exactly.
Yeah, okay. Let's hope they don't do that because we're going to have quite a long time to talk about nothing.
Yeah, okay, all right. Please don't do that. That's a terrible option.
News conference, 2:30 Eastern time. Don't pull the plug, okay? Our coverage starts at 1:30. It wraps up several hours later. Coming up on this program, Stuart Kaiser of Citi, Shweta Kajuria of Wolfe Research, Tom Porcelli of Wells Fargo, the IAEA Director General, Rafael Grossi. Looking forward to that in the next hour of Bloomberg Surveillance, the third hour, just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are. where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
Floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The market remains dependent on tech.
The CapEx figure is what you got to be laser focused on.
We're just really not seeing the rest of the market able to overtake that Mag 7 cohort.
Tech breadth is broadening across the sector.
The technology genie comes out of the bottle. It never goes back in.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P 500 just about positive. On the Nasdaq, up by 0.3. In the commodity market, up again on Brent for an 8th consecutive session, up by more than 3% and just short of 115. Heading into this day ahead. What a day ahead. Later on this afternoon, a Federal Reserve decision. 30 minutes later, a news conference. Then after the close, these names right here, the biggest companies on the planet reporting earnings: Alphabet, Microsoft, Amazon, Meta.
So you've got your geopolitical crisis, a question around how much the drip feed of higher oil prices are going to torpedo the economy and perhaps drive the hot war back into action. You've got domestic drama with the Federal Reserve. What is going to happen there? Not necessarily with interest rates, but with respect to the personnel. And then corporate America really delivers the bazooka, which is how well are the big tech names doing, given the fact that they have driven the rally not only in equities, but in economic optimism.
Well, let's start with the geopolitics, the squeeze in the Middle East and the moves in crude. The Wall Street Journal with this: the president instructing aides to prepare for an extended blockade of Iran, according to U.S. officials.
Blockade in hopes that the Iranians cave. That is what the president is deciding to do. And if you continue to read the Wall Street Journal report, it goes on to say that the other options of either escalating to start strikes again or de-escalating, basically just walking away and saying, we reached some of our targets, we're now going to leave because we don't want this impact on the oil market. The president is not willing to accept. So right now, I think the oil market is starting to wake up to the fact that we've already drawn down a number of inventories. And the president is serious, and the blockade is not ending right now. And you can see that as well, what is going on in the Strait of Hormuz, what the Iranians are trying to do in terms of putting any last barrel of oil somewhere to store.
You can see it through the pricing of the futures curve. Lisa's been on top of this all week. New highs for long-dated contracts this morning at the front end of the curve, just several dollars away from the highs of the year.
Yeah, you pointed out the fact that we all made such a big deal about Goldman increasing their forecast to $90 a barrel at the end of the year. And guess what? If you take a look at the December contract for Brent crude, we're at 88. So to your point, we're already there. And yet people don't seem to be paying attention if they're in the equity markets, at least not on the index level. Is this a boiling the frog moment where we reach a point where suddenly the frog's dead? And that ultimately is what people are looking at, even though it's not very nice.
Stu, how do you feel? Welcome to the program.
So that's the frog, apparently. Look,
a warm welcome to Bloomberg Surveillance, sir.
Definitely.
You take a beat. Coming up this hour, Stuart Kaiser of Citi, head of Mega Cap Tech quarterly earnings. Tom Porcelli of Wells Fargo previewing today's Fed decision. And the IAEA Director General Rafael Grossi as US-Iran talks stall over Tehran's nuclear program. Conversation about nuclear war at the end of the program with Bramo, so that should be fun. All right, we begin this hour with stocks edging higher as Wall Street braces for a busy 48 hours. Stuart Kaiser of Citi writing the following. Tech stocks are priced for large upside moves. April 30th is effectively the largest day for S&P 500 earnings since 2012. A warm welcome to you, Stuart. A proper welcome. It's good to see you, buddy.
Thank you. It's good to be here.
We've been talking about your notes throughout the week. Lisa has. These slow-moving risks could turn what you say is non-linear if they persist. Are we close to that tipping point?
I mean, it does feel like, and our commodity strategists think if this lasts, a couple more weeks, you're at $110, and if it lasts, call it a month after that, you're at 130 on TI, and that I think becomes a real issue for equity markets. I think what equity markets have tried to do is generally with the Middle East is compartmentalize it, and as long as oil doesn't tap us on the shoulder and say you need to worry, we're just going to trade AI and be pretty, bullish, optimistic.
Are you
folks.
feeling that tap just a little bit more this week?
It's getting there. I think it's very interesting because of the FOMC and because of large cap tech earnings, that's just dominating conversation. But we are getting the incomes of what do I focus on after, after Wednesday and Thursday? And if unfortunately what we're focusing on is $120 of oil, then I think it can become an issue for equity markets at that point.
Is it a price level or is it a length of time? Which one?
I personally think it's a length of time, type issue. If you go back to 2022, you had WTI above $100 for 87 out of 102 trading days or something on that order. And equity markets were able to kind of survive that because the long-term oil never really inflected. I think you guys are hitting on the right thing, which is if I'm looking at that 18 to 24-month outlook, as that creeps higher, that's where you get worried. I do think this is definitely an issue of time, especially now that the kind of shooting has calmed down a little bit.
Not to ask you to have a crystal ball, but how long? Because people were saying back at the beginning, and John and Anne-Marie have been talking about this a couple of weeks. Now we're 2 months in, and suddenly the blockade's going to be even there longer. At what point does it really hit that trigger where all of a sudden people say, wait a second, we're going to go back to focusing on that?
Look, I think the issue is, or at the beginning of this, I think the administration was very cognizant of trying to keep oil contained. Right. They were allowing Iran to export. They took the tariffs off of some of the Russian exports, et cetera. Now it seems like they're sort of going the other way a little bit because the goal of the blockade is to shut this in. And I actually agree with the blockade in the sense that it's sort of nonviolent escalation. And I think that's where President Trump probably wants to be. So now it's a waiting game. Do they fill, Anne-Marie's Knicks cup up with oil because they run out of storage and they have to kind of give in? Or do you get to a position where, oil prices get so high and you start to worry about election and U.S. consumer risk and stuff like that.
So do you think the market is waking up to the more escalatory nature with the blockade or what OFAC did just yesterday going after more teapots in China than they are actually the physicality of what is going on?
Yeah, again, I think the equity markets are more than happy to ignore this until oil prices inflect. And the fact that we're not watching, bombs falling in the overnight gives us as equity investors even more freedom to do that. So again, this is a time issue. And I think at some point, oil's not going to go, 105, 106, 108. It's probably going to go 105, 115 or something like that. And that's where I think it becomes a real issue for equity investors.
When do you think that happens?
I mean, if you believe our
let me
commodity
build you
strategists,
a
you're 2 to 4
completely
weeks out from that. But to be
e-commerce
fair,
store.
to Lisa's point, 2 to 4 weeks ago, we might have said the same thing. So it could also be that in these times of stress, people find a little bit extra oil to squeeze out of things, right? Maybe you're running at 100% max production. Maybe you're running at 110% max production, i.e. a production level you can't sustain indefinitely, but you can sustain for a short period of time. So it could be we're squeezing a little more juice out of it than we thought we had.
You're not a bear. It's worth pointing that out. You're not a bear. You are actually looking at this quite bullishly at the moment. What underpins that bullish view?
The fundamentals. I think that's really what it boils down to. Like any of these risks, whether it's the economic data or the Iran stuff, if you had earnings turning over in the U.S., would be red, and there'd be a much different reaction function. So I think that's the key. To me is one, this has been a little bit slower moving, and two, you have very strong sort of earnings fundamentals underpinning things, which is why I think if there's one thing that worries me is actually the NFIB and the UMISH surveys last month that just showed sentiment under so much pressure. Because the longer this lasts, even though oil hasn't re-inflected, gasoline's at a 4-year high. So the refined products that really impact consumer spending are kind of giving you that stress.
I really struggle with you, Mitch. So just convert me if you can. The idea that things have never been worse since the late 70s, that consumers have never felt worse, I just struggle with that. I understand that things are bad now and it's difficult for a lot of households, without a doubt, and I'm not undermining that. Just to say that things are worse now than GFC, than all the other things we've been through in the last 40 to 50 years, I struggle with that. Do you?
Yeah, I struggle with it as well, though. I think like the GFC was maybe a little too complicated, for some people, whereas price of gas is like an immediate hit in the face. Also, if you look at UMISH split by political party, you kind of see there's also a huge political aspect in there as well. So do I think we're the worst ever? No, but when I see both small businesses and those sentiment surveys both turning lower, again, this is a warning sign as opposed to something that is an issue now. But, if you keep sentiment under pressure for 3 or 4 more months, I think then you start to worry about what's going on. And it's also what gets you there. To get sentiment that negative, you probably need oil and gasoline prices high for an extended period of time. And I guarantee you the Fed is not going to be happy about that, if that's the outcome.
So geopolitical concerns, earnings, it brings us to the Fed. Do you care at all about what happens later this afternoon?
Hopefully not, and I don't think. I don't think the Fed wants us to, right? Honestly, I think
you never want us to.
Tune in 1:30 Eastern Time. Thank you, Stu. Go on.
Well, you can see if I'm wrong at 1:30, but I would say that they're going to probably keep with the forecast uncertainty very high line. The worst nomination is sort of back on track, and I think the Fed, gun to their head, would probably just say, we want to get through this without too much commotion. The press conference will be interesting. I thought the press conference was a little more loosey-goosey last time, maybe than it has been in the past. So we'll definitely be turning out to that and watching every minute of it. But I imagine the statement, et cetera, they'll try to keep that right down the middle.
So far, the chairman's future is a non-event for financial markets. Seems to be the event for Fed watchers. Is that something we need to reconcile? Do you think it becomes a market event?
It's hard for me to see it becoming a market event. If you assume that the DOJ charges kind of go away, then whether he stays on for another year or two, I'm not sure that's like a major issue unless it creates some sort of rift within the Fed, which seems unlikely. Warsh is a respected economist. He's worked at the Fed before. He respects the institution. So I wouldn't expect that to be the issue. I mean, if pillow fights are breaking out at the Fed between Powell and Warsh, maybe a different story. But generally speaking, no, I wouldn't expect it to be a huge issue.
Stu, it's good to see you.
Good to see you too.
This was fun. Thank you, buddy. Thank you very much. Stuart Kaiser of Citi. On the Federal Reserve later on this afternoon, that news conference could be spicy on the future of Fed share. And also, I think most importantly, where we are in this economy and the outlook for policy and the changes we could expect in the next 12 months.
Yeah, right now, that is a huge uncertainty. You're talking about the University of Michigan survey and how negative it seemed. And then yesterday, we got the Conference Board consumer confidence number that came out way above expectations. So pick your poison and try to interpret what this economic data really looks like.
It's a difficult moment. Looking forward to the news conference, 2:30 Eastern Time. Our coverage starts at 1:30. Don't listen to Stu. Tune in for that. At 2 p.m, we get that interest rate decision. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Fonnie has more. Hey, Fonnie.
Hey, John. Thank you. The White House is working on dialing down its feud with AI giant Anthropic. Axios reporting the U.S. is developing new guidance that would allow agencies to get around Anthropic's supply chain risk status and begin onboarding its new model, Mythos. Starbucks shares are up almost 5% in the pre-market. The company lifting its full-year guidance thanks to a strong rebound in the US that helped offset slower growth in China. The results suggest CEO Brian Nichols' turnaround plan is gaining traction. Billionaire Bill Ackman's Pershing Square pricing a combined IPO of Pershing Square USA and its hedge fund management company, Pershing Square Inc., in a dual listing expected to raise $5 billion. The two securities will begin trading on the NYSE today. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Shweta Kajuria of Wolf Research saying Wall Street is underestimating CapEx spend heading into earnings. We'll get to that conversation in just a moment, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stradwell here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of the century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When you just kind of look at, what these companies are at least going to do in Q1, I don't see any sort of major tick up in terms of CapEx budgets. That could change as we go into the second half of this year. A company like Meta, well outpacing the industry, largely because of that AI contribution and what they're delivering from an AI perspective to the ad community.
A huge afternoon for tech earnings coming up later on this afternoon. That and pillow fights at the Federal Reserve, according to Stuart Kaiser over at Citi.
Why pillow?
I don't know.
Spitballs, maybe. It's not that violent, which
What's
I like.
the
I like
price
that
action?
sentiment, please.
It looks like this. Futures just about unchanged on the S&P 500, positive on the Nasdaq by 0.2%, on the Russell up by 0.2. Let's get you some morning calls. First up, JP Morgan lowering its price target on Booking Holdings following earnings, citing the impact of the Middle East conflict on travel demand. That name is down some 4%. Your second call from Citi, raising its price target on UPS after its first quarter results, seeing the sell-off in shares yesterday as an overreaction. That name is up by only 0.25%. And finally, BNP Paribas initiating coverage of Alibaba with an outperform rating, expecting cloud revenue growth to accelerate. That name is up by a little more than 1%. Elsewhere, four of the biggest companies on the planet reporting earnings after the closing bell this afternoon. With a preview, Ed Ludlow has more. Good morning, Ed.
Good morning, John. We're bracing for Armageddon, and capital expenditures is still the swing factor for the market, but probably given the Wall Street Journal reporting on OpenAI missing financial metrics in the market of the last 2 days, more than ever, Wall Street is looking for evidence of ROI. They want to see that capital expenditures is followed by boosted forward guidance and tangible revenue growth. And that's the dynamic of this market. It is an AI story, but if you think about how markets have behaved since the March bottom, take the S&P 500 or the Nasdaq 100, if you strip out NVIDIA, it is those four names that have been the big drivers of the multi-consecutive records that we've seen in recent weeks. So that's the story. You know, each of them has a comparable metric in CapEx. Meta does not have the cloud growth for us to track, but that is where we will look after 4 p.m. Eastern time today.
Armageddon, getting Bramo excited, Ed. Armageddon this afternoon, Bramo.
Sorry, I couldn't hear anything. Armageddon.
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 Oh, no.
I wonder how long
Really?
it took for you Ed, to come up with.
Really?
Please have brought that up. Didn't know what I was looking for this afternoon. Ed, thank you, buddy.
That
Appreciate it.
conversation comes later in the
Looking
show.
forward to the coverage. That's later, yes. That's quite the promo, the IAEA, later on this afternoon,
Hope that's
this
not
morning.
Armageddon. Let's hope we just get Armageddon.
Okay, yeah, I didn't hear that at all. All right.
Yeah, I thought that was.
Okay. Shweta Kajuria, Wolf Research, writing the following. We expect 2027 capex for mega caps to increase 25 to 30% year over year. Shweta joins us now for more. Shweta, welcome to the program. We had a conversation earlier on this morning about maybe entering a new phase for capex. Are you expecting an increase from here later on this afternoon?
Well, first of all, thanks for having me. As far as this year goes, I'm not sure if we'll expect a material raise in capex for 2026. In part, it's because the guidance that each of these companies gave, $200 billion for Amazon and 175 to 185 billion for Alphabet, for example, we think accounted for a good level of conservatism, but there is a risk, if there is one, it skews to the upside in terms of raising capex. Our point really was, as these contracts are up for renewal and we think about 2027, we've seen 100% increase in year-over-year pricing for storage as well as memory, and that's going to flow through. And that is what we think the street is underestimating when we think about next year's capex.
Is this a good increase or a bad increase in capex if it's tied to higher costs? I mean, how is it going to be received by markets?
Well, capex increase has been negatively viewed by the market, in part because now, despite the very attractive free cash flow generating profile for each of these mega caps, at least within the internet space, it is in question. And the question is whether Meta and Amazon and Google will need to raise more debt capital in order to support this level of demand by investing in capex. So I think that it's going to be viewed negatively unless we see some material inflection in their top line growth. And that is something that we may see at AWS as well as Google Cloud.
Is this something where we're going to get a sense of the winners and the losers at this point? You talk about AWS and Google in the cloud space, but also when it comes to the AI space, given the report yesterday from about OpenAI in the Wall Street Journal, suggesting that Gemini is really taking a lot of share.
Well, part of the reason why when a lot of the AI names yesterday pulled back, we did not see a major pullback in Alphabet shares. And part of that is because Google is fully vertically integrated with their own chips, with their own cloud service, as well as with their own Gemini model. And that is a huge advantage that Alphabet has. And so if the consumer-driven app in the form of GPT is not meeting its metrics, and the structural headwind on Google search is also mitigated, and at the same time, the hyperscaler cloud business is also up for a good level of acceleration with margin expansion. So we do think that would be positive for Google.
So Shweta, who do you think is winning that race right now? Is it Google Gemini as opposed to OpenAI and Anthropic?
Well, actually, Anthropic, we do think that they are ahead. When we think of their most recent models, we think that they are doing arguably better than most other industry-leading models, especially in security and coding for enterprises. So Anthropic is really firing on all cylinders. And when we think about their annualized revenue run rate, they are now, 30 billion plus, and who knows, by the end of the year, it'll be significantly higher on a run rate basis. So we do think that Google and Anthropic are doing fairly well, and at the same time, Amazon is also narrowing that gap, especially in their Trainium chips against TPUs and GPUs, and they're catching up fairly quickly. And we'll see, hopefully, 30% plus growth rate in AWS in the first quarter, reported later this afternoon.
John has brought this up a lot when it comes to the likes of Anthropic and OpenAI. Is some of this just trying to generate buzz ahead of blockbuster IPOs? Or do you think these models are real and going to really change our realities in the future?
The latter. I think that there is a lot of potential in these models, and what we may see is that so far there's a little bit of a lag from a lot of enterprises that are talking about the promise of being able to cut costs within their organizations, but we haven't seen much of that yet, despite the adoption of coding, etc. So headcount growth will not only moderate, but we may see a lot more of headcount cuts that could be coming that could drive down the profitability. So is that a good thing at a macro level where unemployment rate could rise? I'm not sure where the balance will shake out eventually, but on a profitability perspective, for a lot of enterprises, we may see a pretty good boost in terms of productivity and profits.
We've got a massive afternoon coming up. Thanks for making time for us this morning. Thank you, Shweta. We appreciate it. Thank you. Shweta Kajuria there of Wolf Research. Let's talk about the OpenAI piece in the Wall Street Journal. This is really central. I think it's the epicenter, the foundations of the ultimate bear case, the bubble view, that you have a company that will fall short of growth, that has made massive spending commitments, which will lead to a huge misallocation of resources and overcapacity. That was the pushback we got from the likes of CoreWeave in their own statement yesterday, which is we continue to see demand exceed supply across the AI ecosystem. That's the pushback you're going to hear repeatedly.
And they have other customers as well, that OpenAI is not their sole customer. This is the key point, that even if, say, OpenAI is overinvested and might have too many commitments, how many other players are there out there willing to take up those assets at the same prices? And that, I think, is reason why a lot of people are saying, even if OpenAI hits a soft patch, it isn't going to cause some sort of implosion in this particular industry.
Right, because there's so many other good models out there when it comes to Google Gemini, everyone that talks about Mythos and Anthropic. Interesting point, though, Jonathan, you brought up yesterday, not just the fact that OpenAI can't reach their internal targets, but when it comes to this IPO, the fact that maybe it's actually not as good, they can't reach their IPO, they just get swallowed up potentially by someone else.
I've got no idea what happens here, and the growth numbers can change just as quickly. And I've mentioned this example of Alphabet repeatedly throughout this morning. You come out with a new model, things can change very, very fast. But let's just sort of run with where we are right now with this company. If they fall short, is the risk less existential for the Alphabets, for the Microsofts of this world? When they say right now, the greater risk is underinvesting and not overinvesting, is a lot of that because of what they see as an upcoming threat coming from elsewhere, from OpenAI, from Anthropic, and how would their view of those risks on the horizon change if that company went away?
Is there an existential threat because of the competition from some particular players who are hoovering up everything that they can find to try to make sure that they have the biggest footprint possible? Or is this an existential threat because this is going to be the business model ahead? And if they don't reach some sort of, intelligence that is beyond, then they're going to fall behind, right? Is it sort of an existential, we don't know what we're going toward, we're going to try to keep building this tower to the sky? Or is this something that has a tangible kind of endpoint with a practical business application that they can see with respect to their customer demand?
These earnings calls could be very, very interesting later on this afternoon. Coming up next, we'll talk about the data, a fresh round of economic data set to cross. We'll speak to Tom Porcelli of Wells Fargo. He's with us to break it down and look ahead to a Federal Reserve interest rate decision later on this afternoon. That decision at 2 p.m., the news conference at 2:30. Into it, the price action looks like this. Equity futures just about unchanged on the S&P 500. The Nasdaq bouncing back by 0.3%, getting our attention once again. This move in crude, up by 3% on Brent, just short of 115, an 8-day winning streak for Brent crude, the longest since May of 2022. And with that push higher in the oil market, this in fixed income. Yields up again, 2 basis points higher at the front end of the curve, 386 from New York City. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
"60 minutes out from the opening bell. The cash open just around the corner. Economic data dropping in about 20 seconds' time. Equity futures into that. Just about unchanged on the S&P 500. Positive on the Nasdaq by 0.2. In the bond market, tracking the long end of the curve. Very close to the highs of the year, with 30s at about 495. And the front end of the curve with yields pushing higher over the past few sessions. Up another 2 basis points this morning. Let's round it up. 386. With that economic data, Mike McKee has more. Good morning, Mike.
Good morning, John. It's not quite eco-mageddon, but it is a lot of numbers this morning. Durable goods orders up 0.8%. That's a strong number. Transportation up 0.9. So that tells me off the top, without looking at the details, this is not just a Boeing story this time. Capital goods orders and non-defense ex-air were up 3.3% after a 0.7 rise the month before. So a lot of strength in durables today. A suggestion that maybe AI is really strong. We'll take a look at what the breakdown of the numbers are. The advanced goods trade balance is wider than expected, comes in at $87.9 billion for the month of March, with imports up 3.3% after 5.1% in February. That suggests still strength in the economy pulling goods in. Exports were up 2.5%. That's down from the 5.9% we saw in February. And then finally, we've got housing starts. They are down they are up on the month by 10.8%. Could that be weather, or could it be just more confidence from builders out there. 1,502,000 pace for the year. It is building permits that were down 10.8%. So all in all, a fairly strong report suggesting some strength in the economy, which may have some implications for the Fed going forward.
Mike, looking forward to the Federal Reserve later this afternoon. You, of course, will be in the room in that news conference. Do you think it's problematic that we're spending more time talking about the chairman's future than we are about the economy and the future for policy?
Not really. And I've said that I wouldn't be surprised, put it this way, if the first question to Jay Powell wasn't, what's your future plans? Because we know the Fed isn't going to do anything now. They are sidelined, as are pretty much central banks around the world, waiting to see what happens with oil prices, with the war. And don't forget, we've got tariffs coming down the road. So there's a lot of uncertainty about where the economy is going. And strength in the U.S. economy just strengthens the Fed's hand, their ability to sit on the sidelines. We are going to watch today to see if they say there is a two-sided risk. They've been worried about unemployment as the major risk. Are they going to elevate inflation to that level today when they put out their statement? And of course, we've got the Warsh confirmation vote today. After he's basically confirmed by the committee, then he has to go to the floor, but he will be confirmed there. Do people care what Jay Powell thinks about where the economy is going from here, or does the focus immediately shift to Warsh? That may be answered by what Powell says about how long he's going to stay on the committee.
That is very true. Mike, thank you. Looking forward to your coverage later on this afternoon. Mike McKee, of course, will break down that decision, and he'll be in that news conference at 2:30 Eastern Time. With us around the table, Tom Porcelli of Wells Fargo. Tom, good morning. Do you agree with the take from Mike McKee that it is not that problematic, that we're talking more about the chairman's future than we are about policy and the economy?
I love that you set it up that way. So, look, here we are with this massive tension, right, in the dual mandate. And I would bet that the very first question that he gets asked today at the presser is about whether he's staying or going. And I think when you have this kind of tension, and you're asking that question first, yeah, I do. I think it's a distraction. And so what I would say is, I think it's actually incumbent on Powell to sort of highlight, well, if he is going to stay, why? Something more clear, because I thought we resolved part of this already, right? I thought part of the reason was the indictment. Well, if that's now off the table, then why would you stay? Because I think the risk is that he doesn't give us enough information, and then it becomes a question of, oh, what does he know that we don't? And then it becomes even more of a distraction. So I think he really has to thread a needle here on this.
Do you think it introduces a dependency issue for markets? Because right now I don't see one in the way markets are priced.
So I think, look, I think what markets want is just to get on with this. I think they want to know what the sort of, what the next meeting looks like. Is Warsh there, and is it also with Powell as a big shadow cast over him? I think what markets actually want is clarity.
Not to be a little bit flip, but do you think we're focusing on this because right now there's not that much more to say about the Fed?
So I would actually say I like being flipped too. But what I would argue that there is so much to talk about because when you think about the inflation dynamic that's in play right now, and the degree to which the Fed is going to focus on that, when you think about the labor backdrop, right? Like I wrote this in our daily yesterday. I would be stunned if someone asks him about the labor backdrop, when I think that there's a lot of tension in the labor backdrop too. So no, I actually think that there's a lot to focus on, and I think that this is acting as a big distraction.
The reason why I say that is because the Fed doesn't have control over most of what is causing some of these economic disruptions. We're talking about oil prices rising in the Middle East. That's clearly out of their control. We're talking about an employment market that might be as affected by artificial intelligence as anything else. Again, what's the Fed going to do about that? So how much does it really matter where the Fed sits? Aren't they just sort of sitting there being a receiver of all the incoming information rather than a setter?
It's such an important idea. And what I would say is, the Fed in a lot of ways will set the tone on this. I mean, I don't think that they could just be a passive, sort of listener of what's happening. I think they actually have to be an active engager of, hey, this is how we're thinking about how we might want to react to this. And by the way, if the reaction is, hey, we're just going to sit on the sidelines and wait and see how this unfolds, that's fine. But I think that messaging actually needs to be clear.
So then do they come out a little bit hawkish?
No, I think that they're supposed to be they are supposed to be as balanced as possible. Because I do think, so from our perspective, when you think about this inflation dynamic, I think Lisa's spot on. This is a supply shock. There's literally nothing the Fed can do about that. But I think on the labor side of the mandate, I think that there's actually a lot that they actually, I think, should be a little bit more worried about. I mean, the underbelly of labor, I think, is softer than most people appreciate. And that for us, if you can find this exit ramp, which I think the administration wants to do sort of sooner than later, if you can find that exit ramp, I think that actually would clear the way for the Fed to be able to ease policy later in the year. But so much has to go right between now and then. And I think that's the conversation the Fed is supposed to be having.
So you think the Fed still has a cut potentially this year when Kevin Warsh comes in?
Yes.
And he's going to use the labor market as his
By the way,
analysis.
I mean, again, to Lisa's observation on AI, we just wrote a note on this just this week, actually. We think that AI is having a marginal impact at best at this point on the labor backdrop. So when I hear the argument of, hey, by the way, we're going to be able to cut because AI is going to usher in disinflation, I don't disagree with that as an idea. I disagree with the timing. It's not going to happen anytime soon. So your best argument for cutting this year is the labor backdrop.
It's funny you say that. It was hardly mentioned in the hearing with Kevin Walsh. The focus was almost solely on the other side of the mandate. Why do you think that is?
Well, because I think at the end of the day, when you think about inflation, it is a significant issue for Main Street, right? That is just the reality. And when you think about the people that are sort of, asking the questions, they're going to want to make sure that the Main Street folks are covered in that regard. And I think that's why that actually came up more than even the labor side. In fact, I would say it was far more than labor side, although I would, as I've been arguing, I think we need to focus on labor.
Mike McKee, tracking the data. Mike, I know you've got more. What do you see?
Well, I broke down the durable goods orders, and it is really interesting. There is a huge jump in equipment that one would assume is made for AI and AI data centers. Computers and electronic products were up 3.7%, the orders numbers, after 1.3% the month before. Communications equipment up 3%. So we are seeing some strength in that area, and this comes as non-defense aircraft orders were down by 21%. So it isn't a Boeing story. We did see an increase of 16.9% in defense aircraft orders, which would also include things like missiles, etc. So the war having an impact there. But Boeing didn't carry this one. It is the AI economy that seems to be moving the needle here.
Mike McKee, thank you. We've seen that repeatedly, Bramo. Repeatedly.
Yeah, this is the tension that I have. How do you deal with the fact that people say that the labor market could get hit by AI? This is all hypothetical. We don't know if it's going to be disinflationary.
Sure.
We don't know how much it's going to cause unemployment to surge. At the same time that the capital markets are wide open to finance all of these purchases for all of this AI equipment, even at higher prices, because people view it as existential. So that's where the inflationary aspect goes in, with really mixed signals from the employment market. I mean, it's a conundrum wrapped in a
I know where you're
enigma.
going. Don't worry.
Yeah, whatever. You carry on.
So we should build on this. Can you walk me through how your conversations with clients are going at the moment? Because I'm just thinking about the future and whether non-farm payrolls, which was like tier one economic data for financial markets and setting the tone for risk assets, whether it becomes less relevant.
Yeah, I think right now it is less relevant. I mean, if I would order the things that we're talking about with clients, it's basically the Iran conflict, how that's going to impact the backdrop, inflation, obviously on the back of that. AI is coming up in virtually every meeting. Even, by the way, in the very early stages of the Iran conflict, people still found time to ask about AI. I mean, it was coming up relentlessly, which is why when I hear Mike McKee say, hey, CapEx crushed it, yeah, that makes a lot of sense. I mean, I think, Q2 and Q3, we actually have CapEx performing incredibly well. So I think in terms of focus, it makes a lot of sense what clients are focused on, right? It's how is Iran going to impact the inflationary backdrop, and what is the Fed's reaction function to that? And our answer is the same, and it's been the same for the last month and a half. The Fed is going to sit on the sidelines because there's nothing they can do about a supply shock.
We're told repeatedly that the labour market simply isn't strong enough to generate broad-based price pressure in this economy. Do you agree with that?
Well, I 100% agree with that. I think, when we heard this conversation about the Fed, hiking rates, that was for us, that was an immediate fade. To be able to actually hike rates, you would need a demand shock to come into play, right? You would need some kind of wage price spiral dynamic. And how would you get there? The way that you get there is if there's some additional new fiscal stimulus, not the stuff that's already in tow in the back of tax refunds. You need something new, I think, to really sort of put not just a floor underneath inflation, but to elevate inflation.
So if they introduced a more symmetrical reaction function later on, at least communicated one or attempted to, would you dismiss that?
No, I actually have a lot of sympathy for that, because I do think at the end of the day that they still need to defend their credibility as it relates to inflation. And so in that context, I have sympathy for it.
Tom, it's good to see you. Appreciate it. Thank you, sir. Tom Porcelli there of Wells Fargo on the Federal Reserve, that interest rate decision later on this afternoon, with an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. So recapping the data we just got, the U.S. trade deficit coming in line with estimates at $87.9 billion in March. U.S. orders for business equipment increasing by the most since 2020. The big surprise was in housing starts. They were up nearly 11% compared to estimates that called for a drop of 0.4%. United Airlines and Lyft are teaming up. Starting today, United Mileage Plus members can use their miles to pay for rides. This is the first time an airline loyalty program and rideshare platform have offered direct mile-to-ride redemption in the United States. In sports, the San Antonio Spurs are moving on to the second round of the playoffs after beating the Portland Trail Blazers in 5 games. Philadelphia defeated Boston to force a Game 6 at home, and the New York Knicks are 1 win away from the next round after beating Atlanta by nearly 30 points in Game 5. And that is your Bloomberg Brief. John.
You happy with that?
126 to 97.
Okay.
Incredible game.
Was this a Celsius morning? Is that what that was this morning?
No, I had, what did someone say? I have crude oil in my car. That's where we're at right now.
Up late at the game last night, just about holding it together. All right, up next on the program, the IAEA Director General Rafael Grossi, as US-Iran talks stall over Tehran's nuclear program. Plus, we'll catch up with you, Hira. She's got your morning movers. Bloom Energy soaring after eyeing a massive growth pathway. That name is up by 18% in the pre-market.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data. We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. This is Bloomberg.
I would love to see everybody say things that
are in line with what everyone is expecting. I'd love to see everything come in a way that calms everybody down post the AI stories. Everyone is looking to make sure that this growth is still as strong as it has been. And the bigger you get and the larger the numbers get, the harder that becomes.
That was Sarah Hunt of Alpine Saxon Words on the programme a little bit earlier this morning. Going into the opening about 44 minutes away, your price action shaping up as follows. Equity futures on the S&P just about unchanged, bouncing back on the Nasdaq higher by 0.25%. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Ahead of tech earnings, this is the power story. Shares of Bloom Energy soaring nearly 19% in the pre-market as demand for power tied to AI data centers ramps up fast, helping the company deliver a beat and a raise. Analysts taking notice, raising their price targets. Moving on to Etsy, the online marketplace, shares are up more than 7% in the pre-market after it gave a better forecast than expected, and that's because customers are spending more per transaction. And we end on shares of SoFi Technologies. They're plunging 8.5% in the pre-market, and this is really a cost story because other than that, the company delivered strong growth across the board on both revenue and membership, but expenses jumped more than expected. John?
Yahira, thank you. Thanks for the update. Great word this morning. Let's count you down to just an amazing 24 hours. Look at the diary, the calendar, shaping up as follows. Later this morning at 10 a.m., a Senate Banking Committee votes on Kevin Walsh. Later on this afternoon at 2 p.m., we get a Federal Reserve interest rate decision. 30 minutes later, a news conference, then earnings from Microsoft, Amazon, Meta, Alphabet, and then tomorrow we hear from Apple.
This is really the blockbuster week, and today is a blockbuster day, so stay tuned. We'll be here all day.
Looking forward to it, right?
I
1:30.
think I am.
Coverage
This is going
starts
to be a
at
really
1:30.
interesting one.
Armageddon.
You sticking around for that? 1:30.
We're not calling
Yeah. I'm
Bloomberg
just
Savannah's the
going-
Fed decides. No.
To tune in from home.
Someone didn't sleep last night. Yeah. All right. Let's turn to the war in Iran. President Donald Trump reportedly gearing up for a prolonged blockade of Iranian ports. Peace talks on hold, with the future of Tehran's nuclear program remaining the key sticking point. The IAEA Director General, Rafael Grossi, warning that any new deal that doesn't guarantee the agency's monitoring on the ground will, quote, have an illusion of an agreement. Director Grossi joins us now for more. Director, good morning. Good to see you.
Hello, good morning.
Welcome to New York, and thanks for spending some time with us this morning. I've got a simple question, one I think a lot of people are thinking about. Do we know where the uranium actually is at the moment?
We knew, and we think we know. Most of this stockpile was, for the most part, in a big nuclear compound, which is called Isfahan, near the city of Isfahan. It was there. It was stocked there at the time of the 12-day war last year. So it is believed that the consensus of the community is that it is still there. Even the Iranians have said that it is. So yeah, that's the situation.
Is there any enriched uranium above ground that the Iranians could access? And if so, at what enrichment level?
There could be some amounts in another site, which is called Natanz. But I think both, even the underground and the above ground, which is a smaller quantity, it would be accessible in case there was a wish to be there, to go there.
So what do you think the appropriate solution should be? Is there an off-ramp where maybe some of this could be moved to a third-party country?
Well, there is a negotiation. So it is for those negotiating to determine what they want or what they can achieve together in this process. It is, of course, clear that the issue of this material must be addressed some way or another. And there are different alternatives that have been considered, shipping it out, down blending it. So it is for them to decide. The fact that there is this material is a fact. It is for them to decide. What the IAEA needs to know is that this material is not being diverted. It is accounted for, and we can check where this is.
Does the IAEA have an idea of what survived in terms of centrifuges? How many when it comes to the U.S.-Israeli attack?
Not exactly, because we haven't been able to return there. However, we know these places very, very well. We know the different characteristics of the buildings, and we know the kind of kinetic force that was used there. We do have satellite imagery, so we have a pretty good idea of what might still be there.
We have a ceasefire. Is it part of the negotiations, the talks? Have you asked to get access to these sites, to get your inspectors back in?
Well, I will put it, more or less. I will put it slightly differently. It is, the idea is that when there is an agreement, one essential component of that agreement is that whatever is agreed is inspectable, verifiable. In introduction, you were quoting something I said, that, an agreement without verification is an illusion of an agreement. It's a promise. Who knows?
So I know you've been in touch with Steve Witkoff, Jared Kushner.
Yes.
Have you seen or spoken to President Trump as well as the Iranian side?
I've been working with Special Envoy Ambassador Witkoff and with Dr. Kushner, yes.
Are you closer to getting them back at the table?
To getting whom to the table?
The Iranians and the Americans back at the table?
To a certain extent, there is a table. And they have this table, it's on and off, but there is a conversation,
Have you returned to Iran since February 28th?
Myself, or the inspectors?
IAEA.
The IAEA, yes, partially, because we have been able to return to the places that were not attacked, right? So the Iranians are making our return contingent to an agreement.
How much are you concerned that this episode will only reignite nuclear aspirations around the world in countries that see the success of North Korea and, frankly, the success of Iran, at least in the threat potentially to fend off this type of attack again, should they actually acquire a nuclear weapon?
I've heard that, and that is an argument that I frankly disagree with, and I'll tell you why. We've seen all the commotion and even war, distraction and misery, proliferation attempts bring. You see this, and I'm not saying whether it was justified or not, I'm just telling you, see this. And let's go back in history. Let's go to Iraq. Let's go to Syria. Let's go to Libya. Every time there has been one of these attempts to get to the nuclear weapon, or weapons of mass destruction, for that matter, there has been a problem. There have been wars. There has been death and destruction.
At the same time, in Bloomberg today, there was a big story about how North Korea is actually accelerating its production of nuclear weapons and potentially is on track to have one of the biggest stockpiles out there and potentially could overwhelm any kind of countermeasures in the region. I mean, at what point do you expect to see more of this, considering that there are nations that would like to immunize themselves from these?
We cannot exclude it. I mean, you have a point. We cannot exclude it. The case of the DPRK, I mean, they proliferated in 2006. So 20 years ago, almost 20 years ago, they decided to cross the line. They tested. They expelled the IAEA inspectors a little bit later, I must say, because it's a story that has lots of ups and downs and processes, not dissimilar in a certain sense with what is being attempted with Iran, incentives of sorts, and then at some point that country, in a different geographical scenario, decided to cross the line.
North Korea, precisely the situation we're hoping to avoid in Iran.
Well, exactly. And right now, they seem to be amping up the stakes, considering that there's a report about how much more they have in terms of their nuclear stockpiles.
Director Grossi, appreciate your time. And we know you're in the running to become the next UN Secretary General, so best of luck with that effort.
Thank you very much.
Thank you, sir. Appreciate it. The IAEA Director General, Rafael Grossi, there on the situation in Iran. The situation for financial markets right now, looking ahead to this a little bit later on this afternoon. What an afternoon we've got coming up for you at 2 p.m. Eastern Time. Tune in later on this afternoon for Surveillance The Fed Decides. Kicks off at about 1:30. The decision at 2 p.m. We'll catch up with Bob Michael of JP Morgan, Sabato Rajapra of SocGen, Matt Lazzetti of Deutsche Bank, Jeff Rosenberg of BlackRock. Then we've got to look forward to tons of earnings after the closing bell.
Which ultimately may render anything that we hear in the Fed meeting not interesting. I'm sure Jay Powell really hopes so.
Well, the Fed meeting will be interesting as long as Jay Powell gives us a little bit more of a hint of what his future holds.
A bit like fight at the Federal Reserve.
Yeah.
Hey, Stuart Kaiser at Citi.
I don't want that image.
No.
Not
interested in them running around in PJs
Maybe.
at the Federal Reserve.
No
Slumber party.
Rejected.
Fancy
I'd rather have Armageddon.
Hard pass. What was that about?
He worked hard on that.
Long day
Poor
ahead
Ed.
on Wall Street. We'll see you later from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell,
With deep analysis of the forces driving the price action.
focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to Nasdaq.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's the busiest earnings day of the quarter, 30 minutes to go until the start of trading. I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up, 80 seconds that could set the market's next move. Alphabet, Amazon, Meta, and Microsoft all report after the bell. Meanwhile, at the Fed, Powell's future looms over today's decision as Warsh waits in the wings. And oil rises again as the White House weighs an extended blockade to force Iran back to the table. So again, it's the busiest day of earnings. More than $14 trillion worth of companies are going to be reporting. Just these four are over 15% of the market cap for the S&P 500. So 4 of the Mag 7 will be reporting. Options markets imply that the stocks will move in a nearly $800 billion direction in either way. They're off pre-market. We had a big decline for tech stocks yesterday. So can they save this rally? Let's go back over to the desk because sitting there waiting to discuss tech earnings is Bloomberg Tech co-host Caroline Hyde. Hey, Caroline, good morning. So, I mean, it's going to be
insanely busy today with all of these reporting. If you don't have an algo doing the work for you, I feel like it's going to be a headache of a
Where's
day.
your AI agent when you need them? Brace, brace. It's going to be less than a minute and a half if the timings are the same as the previous quarter. You just get in swift succession the 4 key capex drivers, which not only dictate where the stock moves for them, and we could see the options market saying we could see a swing of $750 billion of market cap among those 4 names. But just think of the ecosystem around them. Think of the run up in chip stocks. Think of the run up in memory names, in storage, because that capital expenditure doesn't just benefit you and I using our AI agents, but it benefits the whole amount of companies that need to help build these data centers. So the run up that we've seen in Micron and others, that could be tested today as well. It's going to have such rippling effects.
It does feel like a really fragile moment. I mean, all you needed to do was look at yesterday, that story on OpenAI, really denting some of the performance of these big cap tech stocks. What does that mean for where the bar sits? Sure, they sold off yesterday. These are still very richly valued companies.
And it's interesting with the OpenAI story, that's all about return on AI. How much are we seeing growth in the consumption of these things that are in consumer and enterprises' hands? How much are you actually seeing their ability to spend on capital expenditure? So it's an odd one, a balancing act that both Microsoft, Meta, Amazon, and Alphabet all have to get right. They have to show growth in their underlying businesses. The Meta, we want to understand that still spend on AI is benefiting their advertising, meaning that we are seeing the fastest revenue growth in at least several years. But then you look at what's happening with Microsoft. Are they getting enough return, as well as seeing growth in the cloud area? Because remember, last quarter for Microsoft, the shares tanked. It was the most in like a decade because we were so worried about Azure growth slowing. And it was 38% then. What are we expecting this time? 38% again. So are they going to still show growth in the overall cloud? We're expecting just Alphabet to be up and away in terms of Google Cloud, or more than 50% growth. AWS, are they still managing to be the dominant force in market share? They've got to have growth in cloud, making up basically for the big chunk of capital expenditure they're continuing to spend. But maybe there's less testing of the adoption rates and more questioning of what are their ability to service. With Microsoft, it's always been, we've got too much demand, not enough supply.
All right, Caroline, looking forward to Bloomberg Tech today. It's going to be, again, a very busy one. Bloomberg Tech co-host Caroline Hyde. And elsewhere today, just if the tech earnings weren't enough to set for your agenda today, we also have a Fed decision. The Fed's widely expected to hold rates today at what could be Jerome Powell's final decision as chair. Let's discuss with Michael McKee, Bloomberg's international economics and policy correspondent in Washington. Mike, a hold, but it does feel like the language coming from the Fed in recent weeks has leaned more hawkish.
Well, it leans more hawkish, but at this point, they're not expected to do anything. I am happy to be the warm-up act for Caroline Hyde and Ed Ludlow this afternoon from 2 to 4 o'clock. After 4, I realize you don't care about the Fed because they're not going to raise rates or lower rates this time. We did have a lot of data this morning that gives them some hope that the economy can muddle through all of this. I'll skip right to durable goods orders. They were up 0.8%, which was very strong, driven by computer equipment and supplies. Basically, what we're seeing here is that AI story continuing to power the business spending side of the economy. Trade deficit wider than expected. Housing starts stronger than expected. And capital goods orders, ex-transportation, 3.3%. So what we're looking at is an economy that maybe has the strength to muddle through if the Fed wants to sit on hold for a while. The question is, do they need to raise rates at some point because of inflation? Timetable this morning, 10 a.m., the Warsh Committee vote. That should take about 5 minutes, and we'll know whether he's going to be confirmed because, of course, then he'll go to the floor, and that'll be a fairly routine vote next week, probably sometime. 10 a.m. also, though, Supreme Court's meeting. We could get a Lisa Cook decision if the court has a sense of humor and wants to do something on the same day as the Fed meeting. 2 o'clock, the Fed decision, and 2:30, the Powell news conference. I would not be surprised if the first question isn't something along the lines of, are you going to stay, now that Kevin Warsh looks like he'll be confirmed? But we'll have to find out, and then we'll wait for the earnings.
Just what we need on a super quiet, chill day is some news from the Supreme Court. Mike, you're going to join us later to have that covered. In case we do get anything, Bloomberg's Michael McKee. And of course, don't miss our special Fed coverage. We'll cover that decision kicking off at 1:30 p.m. New York time. Now, the Wall Street Journal reporting that President Trump has told aides to prepare for an extended naval blockade of the Strait of Hormuz as the U.S. intensifies pressure on Iran. He spoke at a White House state dinner yesterday.
And we're doing a little Middle East work right now, too, if you might know. And we're doing very well. We have militarily defeated that particular opponent. And we're never going to let that opponent ever, Charles agrees with me even more than I do, we're never going to let that opponent have a nuclear weapon. They know that.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, what sort of deadlock does it look like we're in at this moment?
Well, Danny, at this point, it appears that diplomatic progress is stalled because the U.S. has made it very clear that it's not in favor of the latest bid that Iran has put on the table. In fact, you had President Trump posting at 4 a.m. Eastern this morning saying that Iran, quote, better get smart soon, because it's our understanding that Iran has signaled it could be in favor of a shorter-term agreement where we may be able to see a reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. The thing is, Iran's proposal would postpone any sort of dialogue related to its nuclear program, and the White House has maintained that's just not going to be acceptable. Now, that's led the Wall Street Journal to report that in recent meetings, President Trump has opted to keep squeezing Iran's economy and oil exports by keeping this blockade in place, deeming that less risky than, say, resuming the military bombing campaign or exiting the conflict without a deal. This is leading to questions here about a timeline. The blockade has already been in effect for over 2 weeks, and we're getting closer to that 60-day mark. But it is very evident that this is the course of action that the U.S. is pursuing, at least for now, because, Danny, just yesterday, CENTCOM had confirmed that it did board another commercial vessel in the Arabian Sea on suspicion that it was headed towards an Iranian port.
Tyler, so it seems like the question of actually having a more sustained military action on the ground is taken out of the question. Now it's this blockade. Is there any degree to which it's designed to put pressure on China? Have we heard anything from Chinese officials and maybe them pressuring Iran to make some sort of deal?
Well, actually, Danny, one of the reasons President Trump said Iran originally came to the negotiating table for the ceasefire is that he credited negotiators in Beijing on trying to ramp up that pressure. But the U.S. is now putting that pressure back on China. I'm sure, as you saw just yesterday, the Treasury Department issued a warning to financial institutions to not facilitate transactions between Chinese oil refiners that have links to Iran, as Beijing really does remain that #1 consumer of blacklisted Iranian crude. It's part of what the Treasury Secretary is calling the U.S.'s maximum pressure campaign when it comes to squeezing Iran's economy. In his words, also citing the fact that the U.S. is estimating that Carg Island is nearing its capacity levels. There was that recent research analysis that came out that estimates that maybe Iran has about 12 to 22 more days when it comes to that oil storage. So we'll see if maybe that impacts the calculus here when it comes to the U.S.'s timeline. But Danny, to bring it back to China, of course, this is all playing in the backdrop of that we're expecting a summit to take place next month, and maybe about 2 weeks between President Trump and Chinese President Xi Jinping, just raising the stakes of this conflict even higher.
Tyler, thank you very much. That's Tyler Kendall in Washington, D.C. Let's get a check on markets this morning because, yes, oil is back at 115, but the VIX is at 18. And yes, we sold off yesterday, but it didn't really seem necessarily driven by Iran, more of a tech-led sell-off, which is why you're seeing tech bounce back greater this morning. The S&P is little changed. The Nasdaq is up 1/3%, but 10-year yields keep grinding higher, as do 2-year yields. They're both back at March levels. Again, an equity market that is unbothered by that and unbothered by the price of oil. Some of the other movers on our radar this morning, some earnings to get through. Starbucks reporting better than expected quarterly results as its turnaround strategy shows progress. And the CEO, Brian Niccol, will be joining this show with Romaine Bostick at the market open, so in only about 20 minutes time. Elsewhere, SoFi reported a 30% annual rise in non-interest expenses, which is well above expectations. Shares getting punished, down more than 9.5%. And memory storage giant Seagate saw steady growth last quarter and gave a forecast that was much stronger than anticipated. The chip makers really getting rewarded for strong earnings, up 15%. On the other side of the ledger, Booking cutting its outlook for travel as demand takes a hit from the war in Iran. CEO Glenn Fogel will be joining us just on the other side of this break. You're watching Bloomberg Open Interest.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning. Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. It's a lot of good seafood, completely different way. Example, they have the fresh fish. But Japan, the fresh fish uses sashimi. But Peru use fresh fish, like called the ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make novel style.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get you some high interest stories. A look at what's making headlines around the world. Republicans are weighing a plan to cut taxes on investments by adjusting capital gains for inflation, pitching it as a way to ease living costs before the midterms. Supporters like Senator Ted Cruz says that it could boost housing supply and investment, but the proposal faces legal questions, high costs, and criticisms that benefits would skew to wealthy taxpayers. And Bill Ackman's Pershing Square IPO raised $5 billion, including a $2.8 billion private placement. That is short of the upper bound of its target at $10 billion, but enough to launch two public entities. The move advances Ackman's plan to build a Berkshire Hathaway-style investment firm. Investors get a closed-end fund with no performance fees and bonus shares in the asset manager. And I will be sitting down with Bill Ackman. That happens today at noon on Bloomberg Deals. And the Avis short squeeze looks like it's over. Shares are falling after a wider than expected loss. And a major investor sold millions of shares. The stock, which was once up nearly 600% in just a matter of weeks, is now in a sharp unwind despite a small revenue beat and improving costs. So finally, the shorts went out, not after some pain. Elsewhere in earnings, booking shares are down in the pre-market, trading after cutting its outlook and warning that Middle East tensions are hitting travel demand. I'm pleased to say that joining us now is Glenn Fogel, CEO of Booking. And Glenn, look, you and the company are used to disruptions. I mean, things like COVID, concerns about the economy, all of this. How would you rank this? Does this have any sort of historical corollary in just how severe this pullback was due to the disruption over the war in the Middle East and geopolitics?
Well, thanks for having me. And it's a good way to start off. I've had the pleasure of being in this company since the turn of the century, literally. So I was there when the first terrorist attacks in 9/11 happened. And that shut down U.S. travel for some time. And then you went to the global financial crisis, really bad for travel. And then you go into things like COVID, bad. For us, things like the Russian invasion of Ukraine, we were very big in Russia and big in Eastern Europe. And then you have the Israel-Hamas thing, and that very big in the Middle East. Now you have this. And there have been smaller things like volcano in Iceland that takes down European travel for 2 weeks. We had that issue. So this is just one aspect of being in the travel business where things are going to come up and it's going to impact short term, but the long term's always the same. And the long term is people like to travel, and travel is always in the long run going to go a little bit better than GDP. So as long as the world economy continues to increase over time, we'll grow faster.
In the meantime, what exactly does seem to be the issue, Glenn? Is it just the fact that people can't get to the Middle East region, or is it sentiment? Is it pricing that's too high that's deterring people from traveling?
Well, I don't think it's pricing primarily. I mean, let's let's start with the basics. When there are drones and missiles and bombs coming down in an airport, people can't travel there. So right away, you're taking out a lot of travel right there. Then the important thing is that places like Dubai or Doha, these are incredibly important transit airports for people who are going from Europe to Asia or people from Asia to Europe. Really big. That stuff shuts down, and all of a sudden you lost a lot of lift. And now there's going to be an impact on that. Then throw on top of that consumer sentiment, people a little concerned what's going to happen. So that hits it. Your price point is a good one. Price is up. You may not want to travel as much. All those things can compound, and all of a sudden you're not getting as much. But for us, I'll tell you, the thing is, we know in the long run, it's all going to come back.
Are you, though, preparing for increased costs? Just because even if the conflict does resolve itself, there's some questions to how quickly the Strait of Hormuz can open. I know in your outlook, you have a recovery by year end. But Glenn, what is the tail risk? What is the risk that energy prices stay elevated?
Yeah, it could happen. I mean, everybody gets to guess at this, right? I mean, nobody knows. Nobody knows what's going to happen next. I don't know. You don't know. Well, nobody knows. But we know it will end at some point. And we all get to guess when it's going to happen. That's why people have to come up with their best guesses, what they think the long-term, thing is going to be. We think it's going to be sooner. We think that things will be good. Starting, we talked in our call last night about second half of the year. We're looking for the recovery. But that's our assumption. Everybody can make their own assumptions.
What happens if that doesn't get cleared up in the back half of the year, Glenn? Is pressure enough that it gets even worse, or is that desire to travel, does it reign supreme over any headwinds to costs or otherwise?
Your point's a really good one. That demand for travel is so strong. We saw that in pandemic, right? As soon as a country opened up and allowed people to travel, they started traveling immediately and strongly. Remember, we called it revenge travel. That was great. Now, when that's going to happen, we don't know. And if the problem that we have in Iran continues for a longer time than some people are expecting, that's certainly going to impact travel during that time period. But that long term, that's not going to change. Come back to me. Look, when did travel really hit in pandemic? It was March 2000 or so. So now we're into April of 2026. That's all long past, and things have come back really nicely. Well, come back to me in 5 years and look at where we are versus then. That's that long-term view that we always take. Make sure that we're doing what we can control, which is making our service, our product better for our consumers. I can't control wars and politics. I can't control the price of oil. What I can control is making sure we're doing everything we can. Bring in things like AI to make sure things are better for our consumers, making sure we're doing all the things that make it better to travel. We'll be there when the travel demand is able to come back because of these exogenous factors.
I know you look long-term, but I want to ask about an incredibly short-term thing because it is showing my own bias, Glenn. I myself want to go to some World Cup matches. First of all, they're insanely expensive, but, got to pony up to see the big matches, I suppose. But even so, just looking at what's happened in New York City, some of the data I was looking at, some hotels are filled like 18% for the World Cup. Some host cities beyond New York are even lower in terms of capacity. Hotels expected a surge, and it didn't happen. What gives?
Well, I think that's some incredible naivete among people who thought that this was going to be this incredible travel tsunami because of World Cup. But again, I've been in this business for a really long time. And every time there's a major global event, World Cup, Olympics, pick whatever you like, and everybody thinks there's going to be a tremendous amount of travel. And then it doesn't happen and people are disappointed. And that's just the nature of how these things are. There's a lot of incredible excitement at the beginning, but then people see the prices, think about the trouble, and it doesn't happen. For us, the World Cup is always going to be a small thing. We're so big and so global, it's a blip. So I understand the disappointment that some cities are having right now, and some cities are getting a little benefit for sure. I mean, Dallas in the summer, let's face it, Dallas does not get a lot of travel in the summer. So any travel they're getting because of World Cup, that's good for them. But I understand it, and of course the prices are very high in terms of those tickets.
I also wonder if there's some political element to this. And beyond the World Cup itself, I, for example, was talking to a really big real estate investor who's saying, I don't know how I feel about hotels at this moment because international travel to the U.S. is still down. People are hearing stories of getting hassled at the border, and they decide, you know what, maybe I'm just going to go to Greece instead of coming to the U.S. Glenn, are you also seeing that divide between domestic and international travel?
Yeah, no, it is disappointing. As an American, I would love to have a lot more business coming to the U.S. for travel and helping our hotel partners, restaurants, all those things do better because more people come to visit. And it's still nowhere near where it was in the past. And I'm certain that part of it is politics. We are happy to see that the Canadian to U.S. has come back a bit, so that's a good thing. But it is an issue because there are a lot of places in the world to travel to. So if we don't compete well, which means promoting the U.S. as a great place to come and visit, our economy is being hurt by that.
All right, Glenn, we're going to have to end it there. Thank you so much for joining us. We appreciate it. Glenn Fogel, CEO of Booking. Coming up, more earnings on deck. Starbucks CEO Brian Niccol on the company's turnaround strategy and growing footprint. You're watching Bloomberg Open Interest.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Today, the Fed decides.
Regime change at the Fed is a matter of when and not if.
This is not a small matter.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
A series of shocks have interrupted progress.
We've completely priced out a rate cut for 2026. This is a really tough time for all of us in markets.
There is nothing this institution can do in the face of the shock elsewhere.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
5 minutes into the start of your cash equity trading day, let's look at some of the single stocks on the move this morning. Robinhood saying that expenses jumped 18% in the first quarter. They also warned that its Trump account push would require an additional $100 million investment, that punishing shares down 12% on the extra cash needed. Fuel cell maker Bloom Energy, they boosted their revenue guidance for the full year and beat Wall Street expectations, up 23%. And some big moves today. And Jack Daniel's owner, Brown-Forman, they are falling. It terminated merger talks with Jameson whiskey maker Pernod Ricard. It also got a downgrade from JP Morgan. Shares are off 6.7%. just a few minutes to go until we get your opening bell. And we are now looking at S&P futures that are negative after yesterday's decline. Not hugely negative, but it is notable. The Nasdaq 100 now only up 0.1%. The price of oil now at the highs of the morning. Maybe that's finally starting to pressure equity markets. We're up nearly 5%. Brent crude trading at $116.65. Meanwhile, your 10-year yield that is also at the highs of the morning. We're up 4 basis points with both the 10, the 2s, all of them trading back at the levels we saw at March. So there does seem to be some stagflationary risk getting priced in. Coming up after this commercial break, we'll have your opening bell right here on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Seconds until the start of trading. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off. A sell-off yesterday led by tech. And then today we have the busiest earnings day with 4 of the 7 Mag 7 reporting. S&P is off, starting that as the price of oil has trended higher. Nasdaq futures, those trying to recover yesterday's more than 1% loss, but we are certainly not getting there. It's 80 seconds that will change the market when we hear from the 4 of the Mag 7, Meta, Alphabet, Amazon, and Microsoft. Ring the bell. This is a fun one. Down at the New York Stock Exchange, you can see Bill Ackman and the Pershing Square crew celebrating their $5 billion listing of a closed-end fund and a Pershing Square itself. Bill Ackman will be joining me at 12 p.m. noon today on Bloomberg Deals. So stick with us for that as we discuss the fund itself and what it took for him to list it. It's been a long road for Bill Ackman to get to this point. Down at the Nasdaq, we have the Women's Bond Club. They are a mentorship group for women in finance, which is a wonderful and important thing. So we're happy to see them celebrating down at the Nasdaq. All right, let's get to the big cap tech names that are going to be reporting. They are off pretty decisively this morning. Leading the losses, Alphabet and Microsoft, both of those are down more than 1%. Meta, Amazon, those are down 0.6%. So again, it is the biggest day of earnings season. More than $14 trillion worth of companies are going to be reporting, and this is the bulk of them, about 15% of the market's market cap. The focus will remain on AI spending, budgets, and cloud or advertising growth. So what will it bring us at the end of today's trading session? Let's go ahead and bring in Franklin Templeton Senior Investment Strategist, Katrina Dudley, who's been patiently waiting at the table. Hey, Katrina, great to see you this morning. Okay, big tech has a bad day yesterday, but I have to say it feels like it's really fragile. The fact it sells off just on this Wall Street Journal story that maybe OpenAI isn't hitting its internal targets.
You're exactly right. The comments from Sarah Fryer about the concerns that you were having about the growth trajectory is putting in place questions regarding the CapEx. And if you look at those 4 names that are going to be reporting at the end of today, a lot of the questions are, will they keep their CapEx guidance? And how sustainable do they believe? So I do think that they're going to have to go out on the offensive in terms of explaining to investors probably once again why that investment continues to make sense. And I think if they do a solid job on explaining those ROIs, I do think that the stocks will work.
How important is that CapEx, not for the companies, but for the rest of the market, for the chip makers, for infrastructure, things that have been bid up really rapidly? It almost feels like this weird dichotomy where they don't want to be too aggressive in CapEx because they need to please shareholders. But if they're not overly aggressive, then the rest of the market suffers.
It's such a quandary for a CEO. And I've spoken to so many of them, particularly I used to cover the industrial space specifically. And you used to talk to them. It's that last unit of production before a downturn that is the most profitable. You still need to manufacture it because you actually don't know it was the last unit until the downturn happens. And if I have a look at CapEx spending, you continue to want these companies to invest because they've got revenues backing it. So take a look at Anthropic, obviously not listed yet on that kind of IPO schedule. They added in the first quarter alone $20 billion of ARR. And so that $20 billion needs compute to support it. And additionally, what we're starting to see in terms of the need for greater capacity than we probably expected is this credit and token usage. So it has a revenue implication because we're all paying for higher credits and tokens, but it does require a greater amount of compute to support that additional revenue.
And it's just been such a dominating factor in this market, even these private companies, which soon will be public. It feels like we're back in that environment where it is just the pillar of tech that's supporting things. I thought this was also supposed to be the year of broadening out, but then you get a day like yesterday where tech can take the overall market down.
So if I take a look at earnings expectations for the forward year, and I look, there's at least seven sectors that are going to grow their earnings greater than 10%. So I think if you're looking for a broadening narrative, the fact that that's such a broad group of companies, but as you've correctly identified, tech is still the leader of that pack at 27% earnings growth versus just over 10 for the overall market. So I think tech continues to lead the way, which is why when you get concerns over the pace of earnings growth, the entire market kind of sells off. It's like, they sneeze and everyone catches a cold.
Yeah, so today is just incredibly important then, just given that.
I just don't think you can underestimate how important these narratives, but I do think that the companies understand that, but we're all going to be listening so carefully.
Yeah, it's, again, if you don't have an algorithm doing your trading for you today, it's going to be an interesting one. Hey, Katrina, you're going to stick around with us. Katrina Dudley from Franklin Templeton. I want to get a check on Starbucks shares this morning because they are nearing an all-time high. They reported a strong second quarter sales. Shares are up almost 4%, or now they're up more than 4%. Again, it's a turnaround, and it's also a question of the consumer. Clearly, there is still healthy spending. We've seen that in the macro data. So Starbucks shares up 4%, and Bloomberg The Close anchor Romaine Bostick and Starbucks CEO Brian Niccol join us now. Romaine.
Welcome to our audiences across all of our Bloomberg platforms worldwide, television, radio, our partnership with YouTube. Romaine Bostick here, joined now by the CEO of Starbucks, Brian Niccol, fresh off the company's most recent quarterly report, 7.1% same-store sales growth in the U.S. That's a huge turnaround from how this company had been performing in the years past, Brian. When you look at that growth in the most recent quarter, was that based on transactions? Was that based on volume in the store? Was that based on higher prices?
Yeah. Well, good morning, Romaine. And yeah, look, we had a terrific quarter around the world. And yes, the U.S. market definitely stood out for its performance. As you mentioned, we did 7.1% comp in sales. And the thing that is really exciting is it was driven by transactions. So a little over 4%, which just basically means more people were coming into Starbucks every day. And, you know, what I think that really speaks to is the right menu offerings, the right service experience, and then obviously having an entire environment where people felt like they could actually experience the coffee in the moment or the drink and the moment that they wanted to have in their local community.
When you look at some of the momentum that over the last couple of quarters, 7% in the most recent fiscal quarter, fiscal Q1, I think it was 4%. There are a lot of questions about the full year guidance that you gave, which seems to suggest a potential slowdown in the second half of the year, 5% comp sales growth. And in terms of consolidated revenue, you're guiding to flat. What's going on there?
Yeah, well, so look, if you look at the first half of the year, we ended up being about a 5%. And when we look at the back half of the year, we took up our guidance from 3 or better to 5 or better to finish the full year. And, you know, the good news is we had great momentum in the second quarter. That momentum has continued into April, and we'll see how it plays out throughout the year. Obviously, there's a lot of, different things happening in the world right now that we want to make sure we are prepared to handle, and we don't want to get ahead of ourselves, but we're optimistic about what the business can deliver, and we're very optimistic about where Starbucks goes from here. On the guidance, obviously, the good news is we think we've got the right plans to drive the top line. We've got the right plans to work the cost side of things so that we'll also see it flow through. So we're really excited about where we are.
Have you seen any impact yet on consumer behavior because of what's been going on with regards to higher energy prices, inflation?
You know, we've not seen that affect the consumer behavior at Starbucks. And the thing that I'm really excited about is our sales growth and our transaction growth was supported by just about every income cohort. We had growth in every income cohort. And I talked about this a little bit in the call, which I really do think is something to remember, which is when Starbucks does the experience right, our coffee house leaders, our baristas create that moment of connection, that craft experience, the customization that our customers want at the speed at which they want. People come back saying, you know what, that was well worth it. And, I think the fact that we can give you just a little touch of luxury, regardless of where you fall in the income scale, people appreciate it, whether it feels like a little bit of a splurge or whether it feels like, an affordable premium experience. In both cases, people are walking away saying, you know what, that was really well worth it. I want to do that again.
When you came into this job in late 2024, you set out to revamp the stores, revamp the menu, revamp the customer experience. I know you've talked in the past about kind of grading progress on 5 metrics, largely around that customer experience, product availability, et cetera. Are you meeting those targets?
You know, we have made tremendous progress. So you're referring to what we call our GROW report, where it's got 5 key metrics, and our stores are measured on those 5 key metrics. The thing I love about it is it's very simple. It's very straightforward. Our teams now know what they're accountable for. And not surprising, it's driven around, hey, great customer service, make sure you're in stock, make sure you're staffed, right? Make sure you do it with the right speed and make sure everything is food safe and that you give people the experience that they want. And we ultimately call that the 5-shot scorecard. And we saw a 30-point improvement among our stores getting 4 shots or better. And the reason why that's important is once you get above 3 shots, 3.5 shots, we see that play out in sales performance. And so the fact that we've made such tremendous progress is really exciting. And the thing that I love is what's probably most important about that scorecard is it gives us clear feedback to know when we're doing it right and where we have the opportunity to be better. And that's really going to be the key source of how we coach and grow in our stores going forward.
There's another big test, though, coming in your turnaround plan, and that is the rollout of basically the scheduled ordering system. I think that's supposed to debut on May 11th. The idea that people can sort of order ahead, pick up their order in a specific time frame. And I am just curious as to, how sort of the beta testing of this went. Are the baristas actually prepared for this? And how do you compare and contrast it with some of the previous pickup programs that Starbucks had that created some bottlenecks?
Yeah, well, look, the whole reason why we're doing this is to make sure that we are solving that bottleneck issue. So the good news is we don't have a demand problem when it comes to mobile order, right? Our customers want to have that access point. The good news is with our smart queue technology, we've done a much better job of sequencing orders between the cafe, the drive-through, delivery, and mobile order pickup. And now what we're doing is just adding another way for our customer, frankly, to have the experience that they want, which is, hey, look, if I know I'm going to be at Starbucks at 7 a.m., an hour in advance, I can put that order in. The thing that's great about that is our partners now know, hey, I've got an order that needs to be ready at 7 a.m. Our customer knows that order is going to be ready for them at 7 a.m. rather than going just into the app maybe 10, 15 minutes beforehand and finding out what time that drink may be ready. So it syncs up the customer with their drink. It gives our team members, our partners, the ability to really see what is coming down the pike. And in the testing that we've done, the people that participate in scheduled ordering, huge satisfaction for them. And our partners love having the clarity of knowing what's coming. Because remember, in the cafe, you can see the line. In the drive-through, you can see the cars. In mobile order, it's hard for our teams to see what's actually coming. So the ability to have people schedule their order is a win for the customer, and it's a win for our partners.
You've made a lot of changes to the menu, and I am curious because I felt like a year or two ago, you talked about this idea of actually reducing the number of SKUs by about 30%. And you did get rid of a lot of things like the English breakfast latte and a few of the frappuccinos. But I was looking at what you've introduced, energy refreshers, ube, espresso creams, cherry chai, matcha, protein cold foams. I'm looking at a lot of things. Have you actually reduced the number of SKUs or have they actually gone up?
So we still total have fewer SKUs. And the thing that I love about the innovation that we're doing, it's consistent with how we actually build and make our drinks, right? So if it's a tall, you're going to get 2 pumps of or 3 pumps of whatever flavor that you're looking for. And it's going to be consistent regardless of whether it's cold or hot. It's going to be consistent. So what we did is we standardized the builds so that it gave our partners clarity on how to make these products. And, you know, the other thing I love about this is a lot of the products that we've come out with that were probably like nostalgic or, you know, favorites from the past, the ideas came from our partners saying like, hey, you should really think about doing X. And right now we're having tremendous success with mango. And that was one of those things where after visiting a bunch of stores, we heard it over and over again, like, hey, I think we need a citrus flavor at Starbucks. And you know, I'm happy to say that the menu and marketing team were able to deliver on that for our partners.
This has added, though, some complexity, and your CFO, Kathy Smith, talked about this on the call, that some of the margin contraction that we saw in the most recent quarter was partly due to some of this product innovation. I mean, we talk about some of these drinks, the tropical butterfly refresher. I've seen these things. They're works of art, but it takes a lot of labor and skill to go into that. So how do you sort of square the circle with offering these sort of more sort of flourishing products and at the same time maintain your profit margins in order to do them?
Yeah, look, I think this is one of the things we still have work to do on, which is making sure that the supply chain and the technology that supports the supply chain results in us being the most efficient we can be with our ingredients, the timing of when they show up, and the timing of how we replenish. And so we're working on that. We're making great progress. You know, by the end of this year, we will get to a place where we'll have 90% of our stores having daily deliveries and 24-hour replenishment. And the reason why that's important is that supports then each coffee house uniquely with how they are ultimately, how many of those tropical butterfly refreshers that they sell can then be supported accordingly. So that's what Kathy was referring to, is we're still working through how do we manage that supply chain better? Because look, we have a really simple principle. If the product or the food, or I'm sorry, if the drink or the food is on the menu, it needs to be in stock. And then the supply chain has to support the ability of our partners to be in stock with those items.
Brian, before I let you go, I do want to ask you, about a week ago, you announced about $100 million investment in a new Southeast campus down in Nashville, Tennessee. 2,000 jobs or so are said to be going there over the next 5 years. That almost rivals the size of what you have out there in Seattle right now. What is the impetus behind this? I know you sort of framed this as more of sort of embracing a region where we're seeing growth, but is this maybe, I mean, you know, people are going to draw comparisons, Boeing leaving Seattle and other companies sort of moving out. Is this the start of an exodus from Seattle for Starbucks?
You know, look, for us, this really was more to do with being strategically smart about putting the resources we wanted to put in the Southeast to take advantage of, frankly, a talent pool that's being created around procurement, technology, and then also the reality that, hey, we have the real opportunity to grow our business quite a bit in the Southeast, and we wanted to get a presence in that part of the country. Seattle continues to be our global headquarters. And I would just point out, like, there are a lot of companies that have multiple offices to support their business in the world that we operate today.
Brian, really appreciate you joining us. Congratulations on the quarter, and we'll talk again soon. Brian Niccol there, the CEO of Starbucks. Back to you, Danny.
Romaine, thank you so much for that excellent conversation. Romaine Bostic, co-host of The Close, of course, alongside the Starbucks CEO, Brian Niccol. Thank you both very much. Let's bring back into the conversation Franklin Templeton Senior Investment Strategist, Katrina Dudley. Katrina, the space of consumer discretionary as a whole. So far this year, most of the sectors are up. The ones that are down are healthcare, financials, and consumer discretionary, despite the fact people are spending and the sales data has been strong. What's been the headwind for the sector?
I think it's actually the confidence number. I mean, that confidence number is at all-time lows. We've never seen it this low.
The University of Michigan one.
Exactly. So if you take a look at that, what's driving it? First, you can't, geopolitical tension, the Iranian war. We're seeing at the pump, people are driving their cars in and they're seeing the tank. It's much more expensive. And if I look at from a financials point of view, 55% of consumers are talking about the fact that they've seen financial stress or, the deterioration in their financial circumstances. And then finally, you have kind of jobs where people are not as confident about the jobs market. And I think those negatives are actually really driving that negative on the confidence number. However, I do think that one of the things that we talked about earlier in last year is this bifurcation in expectations, where you've had like certain depending on where you're leaning, you're a little more negative because of who's running the country. And I just wonder how much we're overemphasizing that University of Michigan number, because when I talk and we listen to people like Starbucks, Starbucks to me, while it's still accessible luxury, is still a luxury item. And you look at the numbers that we just heard then about, same-store sales growth, not just pricing, but transactions. Right. So the consumer is turning up and is spending. And that's the kind of the dichotomy. So we may be seeing negative sentiment. We may be seeing some signs of financial deterioration, but as you're right, they continue to spend.
I just wonder at what point it stops, because it never has. And it's the question everyone's been asking. Even things for flights, we're talking to the booking CEO, and the hotels around the World Cup were insane. The cost of airlines, of flights, are so high right now. And they're raising prices, and the likes of JetBlue are like, we raise prices and there's still robust demand. It hasn't made a dent. Is the sky limitless? It's so boggling to me that people continue to be willing to spend and don't push back at all.
I think that people, we talk about COVID as a period, and I do think that, we had that revenge travel, and we talked about that. And I think that there's still a bit of a legacy that's coming out. It's not revenge travel, but it's more this idea, if I don't do it now, when? And so if I'm looking at travel, I'm saying to myself, time is never my friend. I want to travel younger and earlier, even as a retiree. So I think that they've just got that consistency of the experience. And then secondly, I always wonder, in a time of war, it really does make you value family. So maybe some of this travel and these trips are trips home to visit family. And when you do that, you definitely don't see hopefully you don't see a big spike in hotel demand, because I'm hoping that they're staying at home and really forming those connections.
I love this as a thesis, Katrina. We all need this bright, sunny outlook. Thank you so much for joining. Always love your time and having you here. Franklin Templeton Senior Investment Strategist, Katrina Dudley. Coming up on the show, AI spending, cloud growth, and ad revenue, the major sticking points for today's Mag 7 earnings. We're going to more on that next. This is Bloomberg Open Interest.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. Stocks are trying to head higher this morning, but they're facing a headwind of higher oil prices off the back of some reporting that perhaps there will be an indefinite blockade in Iran. At least that's what the White House is preparing for. So the Nasdaq goes positive, but the S&P down for another day. The Russell 2000 down 0.2%, as is the Dow Jones. That's down 0.5%. Brent crude, this is on the highs of the morning. Look, it is up 5%, 5.33%, and stocks are only down 0.1%. It feels like it doesn't matter. Will it ever make a difference? The thing that might make a difference today is all of the big cap earnings we're going to be getting. Microsoft, Meta, Alphabet, Amazon. 4 of the Mag 7 are going to be reporting. That's 15% of the market cap. After they sold off yesterday on this OpenAI report, a lot is at stake in about 80 seconds that they report. Again, they are likely to report in quick succession of each other. Bloomberg Tech co-host Ed Ludlow calling today Earn-mageddon. Is that right, Ed? Earn-mageddon?
Yeah,
he joins us now. I feel like
Earn-mageddon.
that also implies that it's going to be like crazy and bad and everything's going to sell off if it's something like Earn-mageddon.
Well, capital expenditures in that context is still the swing factor, right? Because that is what is common between all 4. But I think the way you framed it, the market of yesterday with the OpenAI report from the journal that they're not hitting internal metrics, it's put the market's focus more on return on investment, right? That we will get capital expenditures numbers. The market always wants those hyperscalers and Meta to project confidence, but they also want to see revenue growth and they want an expanded outlook or forward guidance. So that's really the framing, and those numbers across those 4 are very big. Very interesting in how you frame it as a sort of weighting basis of the indexes, right? If you think about where we are right now, from the March bottom or low, and the rally we've seen in equity markets, the S&P 500 hitting records, the Nasdaq 100 hitting records, strip out NVIDIA and Alphabet, Amazon, and Microsoft largely account for that, right? And so there is a lot of jeopardy. And maybe that's why Armageddon is the term we're using.
I also wonder that this comes on the heels of various reports, Microsoft and others, Meta, I believe, about letting go more of their staff. And will that be discussed at all? Is it a reprioritization, or is it some admission that they're trying to get costs under control at the same time they're doing this huge amount of spending?
Well, just last week was when those stories broke, right? Meta is cutting about 10% of the workforce. That was reporting from Bloomberg, citing internal memos. Microsoft is planning, I think, 7%, but as voluntary redundancies or buyouts. So different mechanisms to achieve the same result, and framed very much on needing to focus where spending is. Headcount is a serious factor from a payroll perspective, et cetera. But, probably will come up. At the same time, the change in position from when you and I were speaking in New York a week ago is because of that Wall Street Journal report on OpenAI, the revenue growths will be examined much more closely. That's what I'm reading on the Bloomberg terminal. And for what it's worth, in 80 seconds when 4 earnings hit at the same time, that's tricky to manage. But the earnings calls at the same time is equally as problematic, right? Because you tend to get more specific commentary on the trade-off between spending and growth on those calls. Good thing the Bloomberg terminal's live transcription is so good. You can have all 4 earnings calls on 4 screens if you've got a 4-screen termy setup, which I do. I don't know about you.
I guess I'll need that. You're going to have to share it with me, Ed. This is the thing. Like, if you are a trader and you want to move around depending on what they say, it's so difficult. I mean, surely, I wonder if that makes any difference in behavior around these earnings, that everyone's just going to let their algos go off and decide how they handle these earnings calls.
Yeah, I mean, the one way I think I would look is how broad the reaction is, right? So after market, also look at the supply chain, NVIDIA principally, but the other GPU providers and the memory names. You brought up the Strait of Hormuz in the intro. The environment with capital expenditures is you need to spend them because of the scale of the required infrastructure. But the level of CapEx is also determined by the cost environment. And because of what's happened with the war in Iran, memory, but also, you know, the underlying supply chain for chip manufacturing, helium is something we talk about all the time. That's worth bearing in mind. And it will be discussed on the calls, not necessarily in the earnings statements.
All right, Ed, thank you very much for joining. That is Bloomberg Tech co-host Ed Ludlow. I don't know, Ed, you might get a few messages today asking for you to share your earnings transcript dashboards, because it is going to be wild after the close. And by the way, a Fed decision before that, too. Coming up in the next hour, Mark Thumser from MUFG says the war is underpriced in markets. Plus, we'll speak with the Marsh CEO, John Doyle, about earnings and insurance risk from the Iran war. And TKNG's Neil Grossman on Powell's last stand today. This is Bloomberg Open Interest. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
From ABC News, I'm Brian Clark. Gas prices in the U.S. are at their highest point in 4 years as the war in Iran continues, and that's causing cities like Pittsburgh to reevaluate some municipal projects.
Gas prices go up if
paving costs go up, we will pave less streets next year because it will cost more per mile.
That's Dan Gilman, the mayor's chief of staff. And the White House confirms that President Trump met Tuesday with oil and gas executives, but says it was a routine meeting. Today, Pentagon Chief Pete Hegseth will face questions from lawmakers on Capitol Hill for the first time since the war began. He'll be there for a budget hearing. Argument at the Supreme Court this morning about the cancellation of protected status for immigrants from Haiti and Syria. ABC's Peter Haralambous has more.
The Trump administration has argued the immigrants were never intended to be permanent residents and that the conditions on the ground in both countries are sufficiently safe for them to return home. But lawyers for the immigrants argue the conditions in both countries are far from safe, with the State Department warning Americans not to travel to either country.
Former FBI Director James Comey expected to surrender today to federal authorities. He's facing 2 criminal charges, 2 felony counts for allegedly threatening the president with an Instagram post of seashells arranged to spell 8647. ABC chief legal analyst Dan Abrams says this may be the weakest case brought against one of the president's enemies.
This is going to be a ridiculously hard case for prosecutors to win. He has to have intended it to have been a threat for this to be a successful prosecution.
2 people were transported to hospitals after suspected tornadoes powered through North Texas. Mineral Wells Fire Chief Ryan Dunn says
we had significant damage, major damage in different parts of the area of the northeast sector of Mineral Wells.
You're listening to ABC News. King Charles continues his U.S. visit. He and Queen Camilla will visit New York City today, including a stop at the September 11th memorial. Meanwhile, in London, police are calling it an anti-Semitic attack after 2 people were stabbed in a neighborhood with a large Jewish community. A 45-year-old man's been arrested on suspicion of attempted murder. Testimony will continue today from Elon Musk, who is suing Sam Altman. Musk says he was tricked to invest in Altman's OpenAI as a nonprofit, but Musk says that Altman all along intended to turn the company into a for-profit business. New polling shows a tightening race for Senate in Texas, says ABC's Jim Ryan.
Senator John Cornyn and current Texas Attorney General Ken Paxton have both been courting the support of President Trump, but so far Trump has stayed out of it. While the GOP candidates head for a runoff next month, Democrat James Tallarico leads both in the latest Texas Public Opinion Research Survey in a hypothetical head-to-head matchup.
Big step towards NASA's space exploration goals as most of the core stage of the Space Launch System for Artemis 3 was transported by barge to the Kennedy Space Center. That mission set for 2027. The scrutiny continues on gambling in college sports a day after Texas Tech announced its star quarterback would enter a gambling addiction treatment program. The NCAA permanently banned 2 Fordham University men's basketball players for their roles in a point-shaving scheme. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. We're streaming live at Bloomberg.com as well here. Stocks a little bit trading off here in the marketplace here. We'll keep an eye on that. It's a busy day. We've got, Scarlett, tons of earnings after the close. Carol Master and Tim Stenovic, they will cover it all.
They have their hands full because you've got 4 of the Mag 7 names reporting today after the close. Alphabet, Meta, Amazon, Microsoft, Apple is tomorrow. It's a huge part of the Nasdaq 100, of the S&P 500. Never mind the fact that you have a Fed decision today as well.
Yes, so we're going to be all over that throughout the day, so stay here at Bloomberg. This is Bloomberg Intelligence, Scarlett Fu and Paul Sweeney. Coming up, we're going to check in with Enda Curran, get the latest on the Fed decision and on the vote for potential Fed chair elect Warsh. So we'll get the latest.
Is that the title? I guess so, right?
I
Fed
think
chair
that
elect?
maybe 10 a.m. That's kind of some of the reporting I'm seeing. We'll see if that plays out. Tyler Kendall, Washington correspondent for Bloomberg News, will give us the latest on Iran, as well as the King's visit to Washington, D.C. yesterday. Kim Forrest, founder and CIO of Bocop Partners, will get her thoughts on the market. So a lot coming up in the next 2 hours. We'll get you set up for these markets and for the earnings after the close tonight. Right now, let's get a reset. Bloomberg Business Flash with Alexis Christophers.
All right, thanks very much, Paul. And oil is spiking as a result. We have got stocks and bonds lower. The S&P 500 down about 10 points now. Dow Jones Industrial Average slipping about 184. The Nasdaq Composite down 41. This, of course, ahead of the Federal Reserve's meeting later today, possibly the last one with Jerome Powell as Fed chair. And consensus is that they are going to hold interest rates steady at the meeting today. And of course, we're going to hear from those big tech heavyweights after the closing bell, including Amazon and Alphabet. The big story, though, today is really over in the oil pits, where Brent crude is up 5% at $116.79 a barrel. West Texas Intermediate crude up nearly 5% at 104.81 the barrel. The Bloomberg Dollar Spot Index now up nearly 1/3% at 1201.30. And we've got the 2-year yield at 3.89%, the 10-year at 4.40%. Quick check on Bitcoin. It's up about 0.25% at 76,636. Spot gold down more than 1.5% at 45.23 the ounce. And just want to call out Starbucks. The stock is up more than 6.5% after that better than expected earnings report. And ditto for Visa. That stock up 8% now after a blowout earnings report. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Alexis Christophorus. We do have some headlines here coming out, Paul, because it is an opinion day for the Supreme Court. And the High Court has ruled that it is curbing the use of race in drawing voting districts. Yep. Going back to that gerrymandering idea.
Yeah, so we'll see in that. So we'll have some more reporting on that. Again, the red headline coming across the Bloomberg terminal. Supreme Court curbs use of race in drawing voting districts. And we've seen both parties, over the years. It seems like it's more so than it's ever been, just kind of gerrymandering and redistricting voting districts. And it seems like both parties are doing it more aggressively than ever. So
Right. It originally started off as something that the Republicans did, but as of late, the last year or so, you've seen the Democrats do it. In this specific case, the court has ruled that a majority Black Louisiana district is unconstitutional. So the Supreme Court is restricting the use of Voting Rights Act in map drawing. Again, the Supreme Court curbing the use of race in drawing voting districts. My guess is this has an effect right away. So this has implications for what's going to happen in the midterms and certainly for the 2028 presidential election.
Yeah. And again, this is a midterm election year. And the expectation typically in a midterm election year is the party that is not in the White House tends to gain a little bit of gain some seats here. And that is the expectation that the Republican Party may win control of the House. And now there's even some discussion about the Senate may be in play as well. So we'll have to see how that plays. And we'll see how this Supreme Court ruling impacts those elections.
And we should mention as well, since we're staying on Washington, the Senate Banking Committee is also voting to confirm Fed chair-elect, and I like the way that you put that, Kevin Warsh. That began at 10 a.m. And if you wanted to watch the proceedings, it's available to you on the Bloomberg at Live Go, L-I-V-E Go, on the Bloomberg terminal. Tom Tillis was kind of the last holdout. He's the senator from North Carolina who had said that he was not going to vote for Kevin Warsh or in this hearing until the investigation, the DOJ's investigation into the Fed was fully resolved.
Right. And it sounds like that they do have an agreement now. And so now this voting can go forward. And we'll see whether he'll be able to participate in the meeting this afternoon But in any case, that process is moving forward, which I think is positive for the markets in general. I mean,
Yes.
markets like to see a nice continuity in the Federal Reserve.
I mean, the big question now is whether Jay Powell will step down as well, because his term as chair ends in mid-May, but his term on the FOMC on the board goes on until January 2028. And what kind of assurances does he need in order to step down? And of course, this is something that everyone's going to be listening for at the FOMC presser, which begins at 2:30 p.m. Eastern time. Of course, we will be covering right here on Bloomberg Radio. The Fed decides. Tom Keene, John Farrow, and Lisa Bromwitz will be all over it.
Yep, that's starting at 1:30 p.m. The Bloomberg coverage, 1:30 p.m. Wall Street time. They'll get the statement at 2 p.m. and then the press conference at 2:30. Again, Supreme Court ruling today curbs the use of race in drawing voting districts. Let's get some perspective on what all this means. June Grasso is our legal analyst at Bloomberg here. June, talk to us about just the background of this case and then maybe what we may know about this ruling here.
So this is obviously a Louisiana case, and Louisiana has a third of its population is Black. So it redrew, after a court battle, it redrew its maps to reflect that. And then it came before the Supreme Court. And the question before the Supreme Court basically is whether you can use race in determining these voting districts. Now, the Supreme Court has eliminated every other kind of challenge, basically. And what it did is, for example, you can't challenge gerrymandering for political reasons. So you could only at this point challenge it for racial reason. And now it appears that the court has curbed the use of race in drawing voting districts as well. This basically, I think it shatters the Voting Rights Act of the civil rights law that was so hard fought to get voting rights and to ensure voting rights for people of color. And so the Supreme Court already has taken away a section that required certain states to get pre-clearance before they redistrict, and that was a case called Shelby County versus Holder. And now in this case, it appears they're also getting rid of the possibility of challenging gerrymandering based on race. This could affect, I think people have said, as many as 12 different congressional districts throughout the country. So it's a 6-3 vote because the 3 liberals are in dissent. This court has really dismantled voting rights over and over again. So this is shocking in a way, but it's not a surprise after hearing the oral arguments.
So
I'm sorry. Oh, no. So what implications does this have beyond Louisiana? Because I'm sure plenty of states are watching this carefully. Yeah, as I said, there are I think around 12 different districts that could be affected by this. And of course, they're mostly, I think they're all Democratic representatives in those districts right now. So if you take out the use of race and it's gerrymandered again, you're going to have less Democratic districts, most likely, less districts where people of color are in the majority. So I heard one election expert say that this is just sort of like Armageddon for voting rights if they decided to do what they did here. And it was written by Justice Alito, and I haven't gotten through it. It's written by Justice Alito, so you can imagine that it's very, very strict and very, very, he's always votes against voting rights. So
there you go. All right, June, thank you so much. Appreciate that. June Grasso, Bloomberg's legal analyst. Again, the Supreme Court curbs use of race in drawing voting districts. Another red headline, Scarlet crossing the Bloomberg terminal here. Warsh Fed chair nomination clears Senate panel vote. So after much delay, moving very quickly here. So we want to bring in Enda Curran, Bloomberg Fed and economics reporter. Enda, it looks like we're making some progress here, or the Congress is making some progress on getting Mr. Warsh on board.
Yeah, so after many months of protracted negotiations, we finally have had that committee vote now. So this moves Mr. Warsh's nomination out of the Banking Committee, and it should go on to the Senate floor for a full vote. Probably at some point soon. Mr. Powell, current Fed Chair, Mr. Powell's term ends on May 15th. Whether or not Mr. Warsh gets his full vote by then, or whether he's a few days over, it doesn't really matter very much because the next policy meeting after today isn't until the middle of June. So today just really cements that after that extraordinary succession drama we've had since January over the DOJ investigation and all the rest of it around all the rest of questions around the Fed, Mr. Walsh has now cleared that critical vote and is on the way to be the next chair.
Right. The question now is what happens with Jay Powell's seat. His term as chair ends on May 15th. Do you think this is something he's going to address at the news conference at 2:30, Enda?
I think it'll be hard to avoid it, Scarlett. As you say, his term as chair will end in the middle of next month, but he's entitled to remain on as a governor at the Fed until January 2028. Typically speaking, Fed chairs head off and enjoy their retirement or head into the sunset. But Mr. Powell made it clear, was maybe last month, I think it was, in his press conference, that he can't leave his governor role until the specter of that DOJ investigation into him and the Fed is cleared in all finality. Now, there's a debate over whether or not what the DOJ did last week in terms of dropping their investigation does meet that threshold of finality, because two things. A, they continue to appeal against the Fed's court win that quashed the DOJ subpoena in the first place. That's one thread on this. And the second part of it is the Inspector General investigation into the Fed, into the cost of the building renovation there, is expected to report at some point over the summer. And the DOJ made it clear they have a threat that they could renew their investigation depending on what that particular finding from the IG throws up. So from Mr. Powell's point of view, he may want to hang on to all of that's clear. Critics would say he should just move on because it risks sort of stoking political resentment and political criticism of the Fed. But he's sure to comment on it, I would imagine, at his press conference later today.
Independence of the Fed, where is that discussion these days, Enda?
It's become very fraught, very divisive, of course. Mr. President Trump continues to hammer the Fed over interest rates. He wants them brought down quickly. He's even said that he would be disappointed if Mr. Walsh, if he gets finally confirmed as chair, doesn't get to move on pretty quickly as well. So that political pressure continues to be there. We await, of course, the outcome of the Supreme Court ruling on the Governor Cook case. That's going to be very important. We'll wait and see what Mr. Powell signals about his future. That's going to be very important. But I think between now and the end of the year, there will be a lot of focus on how will Mr. Walsh respond to political criticism. Will he kind of stand up as a heat shield for the Fed, or will he be seen as buckling under Mr. Trump's pressure on the one hand? And on the other hand, how do the rest of the policymakers react, including Mr. Powell, like Ms. Cook, etc.? So lots of question marks still in terms of the mood music hanging around the Fed.
We've kind of addressed all the existential questions related to the Fed. I'd even get to the decision itself, which comes out at 2 p.m. We know that the Fed is unlikely to do anything with the rates. It'll keep them unchanged at 3.5 to 3.75%. What is the thinking in terms of any kind of tweak to the language inside the policy statement?
Absolutely right, Scarlett. Probably because of the Iran war, they're kind of sitting on the sidelines, waiting to see where things go. So no change on the policy side, like you mentioned. There has been, though, this kind of debate a bit behind the scenes at the Fed about whether or not they should be signaling in the statement that, there's two-sided risk here. For sure, at some point we could lower interest rates. That was the story before the Iran war. But some officials at the Fed have been saying we should be warning that at some point we may have to raise interest rates. And it would be interesting to see if Mr. Powell sort of puts a bit of color around that, if he says that debate gathered more steam today, whether or not even that line does appear in the statement, this idea that there should be two-sided risk signaled to the public. Some people think Mr. Powell won't want to signal too much new in his last press conference as chair. He wants to hand over to the new incoming chair and let him sort out the messaging. But I think that's one thread on today's story which people will be keeping an eye on.
All right, and thank you so much. Really appreciate it. And the current global economy reporter for Bloomberg News. He's based down there in Washington, D.C. Again, I was going to say the big news of the morning, but I'll just say one of the big pieces of news this morning.
So many headlines.
Is the U.S. Supreme Court limited the use of the Voting Rights Act to create predominantly Black or Hispanic election districts in a major constitutional ruling that buttresses Republican efforts to keep control of the House in this year's midterms and beyond. We want to go back to June Grasso. She is Bloomberg's legal analyst here. June, talk to us about the history of this ruling and this aspect of redistricting.
So, the Voting Rights Act has been under fire for, such a long time. And the Roberts Court has been very receptive to sort of destroying, I'll use the word destroying, the Voting Rights Act. In 2018, I believe it was, they took one part of the act, which required pre-clearance. Certain states that had a history, considered to have a history of racism, Texas, et cetera, certain states in the South would have to get pre-clearance before they redistricted, before their plans were approved. They took away that. And now this is really the other significant part of the Voting Rights Act, the remaining part of the Voting Rights Act, which was passed in 1965 to address discrimination against Black votes. And I'll just read a line from what the dissenting opinion of Justice Elena Kagan, the 3 liberals who are in dissent, said. Under the court's new view of Section 2 of the Voting Rights Act, a state can, without legal consequence, systematically dilute minority citizens' voting power. Of course, the majority does not announce today's holding that way, but it's understated, even antiseptic. So, I mean, this is really consequential, and it's consequential for, I think, the Republicans, holding the House. If some of these states can redistrict before the midterms, I mean, I don't know if that would be possible as far as timing, but it really is consequential for voting rights. And the court has, systematically through the years, you hear them say, well, we're so far away from the time of the Voting Rights Act, and there isn't, I mean, I think Justice Roberts was the one who said in Shelby County, we don't have that kind of discrimination anymore. Okay. So we don't, and how long can we keep doing this? How long can we keep having these rules that prioritize, race in voting districts? So I think it's a stunning decision, although the court has been heading in this way for a long time. I think a lot of people hoped that they wouldn't get to it at this point. But so, it's really consequential.
It's consequential. And you go back to the Voting Rights Act that you mentioned and how this is kind of part of the dismantling of it. What is left of the Voting Rights Act right now?
I don't think there's much left of it. I have to get an expert because the two biggest sections were the section that was eliminated or gutted in the Shelby County case, and then this section. So I don't think there's much left of the Voting Rights Act.
How are districts drawn up in the first place? I mean, that's my question.
That is a great question.
Well, gerrymandering. Have you seen you seen that some of the, even if you look in Louisiana, in order to keep the House Speaker in a Republican district, they have these odd shapes that you would never imagine, different kinds of weird shapes so they can get in people that they want. It's political at this point. It's, and, the Democratic states do it as well. The Republican states do it as well. And it's, it's just I don't know.
My old district in New Jersey, which we've since moved from, I finally saw it drawn somewhere, and it was unbelievably.
It's just a bunch of squiggly lines everywhere.
I'm like, how did they figure that out? Because having lived there, that's not how I think of my area.
No.
My area is this town, this town, this town.
No, it's been cherry picked.
Yes,
Yeah,
exactly.
they have people who do this for a living, and they have all kinds of, electronic ways of doing it. But if you looked at this, the one in Louisiana looks like a sliver up the coast. But all the states
do that.
And, there's the only thing that has happened but only in Democratic states, they've had maps drawn by commissions. So in that way, you get a fair map because it's drawn by a commission with maybe equal representatives on, but only Democratic states have done that. And that's put them in a bad position, which is why you have some states like California redistricting in a different way, not using the commission. So the way to do it is to, have a commission. But when you let Republicans or Democrats do it, they're going to do it to their own advantage. And it's so easy for them to draw maps and just eliminate certain, minority populations. It's a mess. It's a mess, really. It's just a mess.
Let me ask a really dumb question. When the Supreme Court makes a ruling like this, people jump into action right away, right? I mean, this has immediate consequences?
Well, yeah. Well, I think what will happen is, states will start looking at this and deciding what to do. Louisiana certainly is going to jump into action. Yeah, because what they're going to do is, the politics of it, they're going to start looking at their maps and seeing what they can do and how they can use their power as legislators to redraw the maps. I mean, I just think this is opening up a can of worms that, the implications are just crazy, I think, as far as what's going to happen next, because, we see that what's happening. Florida is trying to redraw its maps without even this decision. So, we've come to the point where are we going to have Democratic states with all Democratic districts and Republican states with all Republican districts? It's sort of mind-boggling. I'm still stunned by this.
Does this change any of what California voters just decided or what Virginia voters decided?
No, I don't think this has anything to do with that because that was a separate. I think that Texas passed the Supreme Court. I think California may have passed the Supreme Court as well. They're saying that wasn't based on race, that was based on politics. And it's okay to gerrymander based on politics. So think about that. Think of it. It's okay to gerrymander based on politics. So, Republicans and Democrats are fine, or they're allowed to go in and gerrymander based on politics. Before this decision, it was just you couldn't gerrymander based on race, and now you can gerrymander basically based on race, no matter what the Supreme Court said in its majority opinion.
What's left for the Supreme Court this session here? I mean, this was a big one.
Yeah, the case that we're waiting for at Bloomberg is the case of the attempted firing by President Trump of Lisa Cook, the Fed Reserve governor. And the thing is that every week that it's opinion day, we expect that case to come out because it was argued so long ago and because it seemed like the justices were on board with not allowing her to be fired. But it's taking so long that you start to wonder what's happening. Is it because they were writing a lot of concurrences and dissents? Is it because they're having a hard time distinguishing as they want to the Fed chair from other board members that he's fired? So is that what's taking them long? Are they just holding it?
That's what I think. I think they're just good programmers, and they're holding their juiciest one for
They
them.
say they don't. They say they don't, but I don't. I really don't believe that because it's no coincidence that all these controversial cases come down the last day of the term. So
when is the last day of the term?
Well, it's a movable date.
Okay.
It used to be the very end of June, and then they would go on vacation. But it's now, we've had a couple of times where it went into July because they couldn't get their stuff finished and they had so many late breaking opinions. There used to be, there's a story about a justice that used to have his car waiting outside the court the last day so they could drive him to, his vacation spot. Then they all disappear and go to different locations for the summer.
All right, very good. June Grasso, thank you so much for that analysis there. June Grasso, Bloomberg's legal analyst, giving us the latest on the Supreme Court ruling. I want to bring in Michael McKee, covers all the economics and international aspects of our reporting for Bloomberg. Michael, you're down there in D.C. You've got a Fed meeting today, but boy, we just had a Supreme Court ruling, which has obviously political ramifications for this country and maybe economics as well. What's your initial take of the Supreme Court ruling here?
Well, the ruling sets the stage for states to redraw congressional districts, but the question is, do they have time to do that? In some states where they have a number of black majority districts, it's already too late because filing deadlines for primaries have already passed. The issue is how many states could still do it. One expects that Louisiana would try, but the secondary question is then how far do they get with this? Because if you draw the districts, somebody is going to complain to the courts about it. It goes back into the court system to question whether the new maps are discriminatory in one way or another. It does have a long-term foundational impact, however, in that it dilutes minority voting power in the sense that you can't create a district that is basically guaranteed to elect a minority, and that would be a question of disenfranchisement for a lot of people. And the kind of deal that many states made that they would never admit is that we'll give you your own minority district, and then we will be able to use the rest of the state for our own white majority districts and most states Republican districts. So at this point, there could be a shift in the balance of power in some states once they can get around to actually changing their congressional districts.
Boy, this gets messy really quickly. And that's the net effect of this kind of decision. Was this a surprise, the way that Supreme Court ruled?
No, it's not at all. In fact, legal and political analysts had been expecting this for quite some time. The court has not liked the Voting Rights Act for many years. Chief Justice Roberts has said that while it was useful at one time, it cannot be permanent law, because many of the states and many of the aspects of the Voting Rights Act have been, you'd say, cured, taken care of. People can vote, poll taxes are gone, that sort of thing. So they've been gutting it one section at a time. This is Section 2, and now it is gone. So the Voting Rights Act itself is not worth much anymore, but that was expected, and that's why you have a lot of lawyers, especially on the Democratic side, waiting to pounce on any new districts redrawn to see if they can make the case that they discriminate in one way or another and aren't fair.
All right, Michael, you're down in Washington, D.C., and we have the Fed statement at 2 p.m. and the Fed conference with the media at 2:30. It looks like Mr. Warsh's nomination, after being grounded to a halt, is moving very quickly here today. What's the latest?
Well, it was always expected to move quickly once Senator Tillis dropped his objections because the Republicans control the banking committee. And that's what happened, a 13-11 vote. Most of the Democrats did not even show up for the vote. They voted by what's called proxy. Next, he goes to the floor. Now, they could do it within 24 hours. That's the limit. They have to wait before they can bring it to the floor. But the Senate is so wrapped up in other business with the budget, with the FISA surveillance warrant bill, that at this point, it's probably going to be another 2 weeks because they're off next week. And so maybe the second week of May. They're off next week. It's not a surprise that legislative days are not the same as calendar days.
Clearly.
So it's probably going to be the best guess is the second week of May, which would be in time for him to take over as chair on the 15th when Jay Powell's term is up.
Okay, so that being the case, that this full vote will probably happen before May 15th when Jay Powell's term is up as chair. How does that change or affect, or maybe not at all, the news conference that Jay Powell will be hosting at 2:30 p.m.?
I don't think it changes at all because nobody expected Warsh not to get through the committee. The question is really, does Jay Powell want to wait around and see what criminal jeopardy might still be out there for him? They've dropped the probe at the Department of Justice, but said they could bring it back if the Inspector General finds any criminal liability. And even if they didn't, this Justice Department has shown that it can sort of make things up to try to pursue you. And we saw that with the Comey indictment yesterday. So does Jay Powell trust that the investigation is well and truly over, in his words, enough to resign? There's also the possibility, which has been talked about, that he might want to wait until after the midterms. If Democrats were to win the Senate, then they could block any particularly difficult nomination to the Fed by President Trump, and so he might want to do that. He's talked about preserving the Fed's integrity. So that's going to be the major question surrounding today's meeting, whether Jay Powell.
What are maybe the expectations for Kevin Warsh and his chairmanship?
Well, the expectation is it's not going to be very dramatic when he takes over because the economy sort of has the Fed boxed in at this point. Inflation is rising, and the longer the the Strait of Hormuz is closed, the more danger the economy faces from higher inflation from not just energy prices, but from second round effects from things like food prices because fertilizer's not getting through. So they can't really move to lowering rates as the president wants right now. And they don't really know what their timing is going to be as long as the war drags on. So Warsh will come in and we'll have a series of meetings probably where the Fed does nothing. Maybe he starts to talk to them about the idea of getting rid of the dot plot or changing some communications. But since he's just walking in the door, it's probably not something that's going to happen immediately. And of course, if Jay Powell stays on, it raises a question of who's really influencing the Fed at that point. Awkward, yes.
All right, Mike McKee, thank you so much. Mike McKee is our chief economics and policy correspondent here in New York, but he is in Washington, of course, to attend that FOMC decision due out at 2 p.m. Eastern time. Of course, we will have special coverage of the Fed Decides starting at 1:30 p.m. Tom Keene, Jonathan Farrow, and Lisa Bromwitz, they will be on Bloomberg Radio, Bloomberg Television. You want to keep it right here as we cover all of that. And ahead of that decision, we have a mixed day in equities right now. The S&P barely higher, the Nasdaq up about 0.2%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
1040 on Wall Street. I'm Alexis Christoforous. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Oil is spiking today as the U.S. signaled it would stick with a naval blockade of Iranian ports to choke off Tehran's oil exports and force it back to the negotiating table. Brent crude is now above $117 the barrel. West Texas Intermediate crude up nearly 5%. At about $105 a barrel. Ahead of today's Federal Reserve meeting on interest rates, likely the last with Jay Powell as chair, stocks are mixed. S&P 500 up about 3 points. Dow Jones Industrial Average down about 220. Nasdaq Composite up 45. As for some stocks in the spotlight, shares of Seagate Technology racing ahead 15% after the company said the data storage needs of quickly growing artificial intelligence applications helped more than double its profit during the latest quarter. Shares of Adidas up about 7.5% after reporting an upbeat first quarter report card supported by strong momentum in its apparel division and healthy demand for its soccer and running shoes. And shares of Biogen up 2.5%. Sales beat expectations. It's a sign the company's Alzheimer's drug is helping offset pressure of its multiple sclerosis franchise. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
Thank you so much, Alexis. That's a lot of news to digest. We went through a lot of earnings. We've got a lot more to come this afternoon, Paul, with 80 seconds of big tech earnings.
Wow.
That's according to a Bloomberg News story headline that will decide the stock market's fate after 4 p.m. this evening.
Absolutely. We got four of the biggest companies in the U.S., Alphabet, Amazon, Meta, and Microsoft, all reporting after the close here today. Let's welcome in David Kirkpatrick, founder of Techomany. He's been covering this tech space for a very long time. David, we got these big companies reporting after the close here today. The focus is going to be on AI. How are you looking at AI these days? And how do you think the companies are approaching AI these days?
Wow, Paul, thanks for having me. A great big question. Obviously, AI is the historic, massive technological transformation that is washing over all of us these days. So it is the story in technology and to some extent in business and certainly the defining story for the markets in many ways. So these companies have all executed extraordinarily well in the last couple of years, I would say. They have made shockingly large commitments to investing in this new technology. The question that will be on investors' minds today and for the foreseeable future is, have their bets been so large as to be illogical given the scale of revenues and profits that are possible as a result? But, I think today is going to be a pretty good day for these companies from an earnings point of view. The question is, will they disturb people with their forward projections, with what they say they're going to have to spend in the future, and with what they say about what might happen next quarter?
Yeah, that's a great way to put it. And let's just quantify that shockingly large investment that these hyperscalers have made in AI. They've earmarked $660 billion for 2026 on AI infrastructure. I know it's so mind-bogglingly large. My question to you, David, is that sometimes investors are okay with what these companies are projecting. They feel comfortable with it. They cheer it, in fact. Other times they get really nervous and they kind of sell off the stock because it's much larger than they thought, or it's something that doesn't feel good at the moment. Where do you think we are with that?
Well, I think we're on a precarious knife edge, really. And I think that's hard to say because people are very aware that these stocks are very highly valued and the expectations are huge. And the entire market, to some extent, resides upon the outcome of these questions. So, the stakes are extremely high. So I don't think every investor is in the same place, but I would say on balance, they have to be very decisive today that they are making the right bets and that they will pay off over the long term and to some extent over the short term. I mean, obviously, investing as, you know, on average, these companies of the four we're talking about are putting maybe 150 billion, they claim, into, on average, into AI infrastructure this year. We won't see the profit results from that in the next couple quarters, but investors have to be reassured that there is potential profit coming that's proportionate to this historically large investment. I am not convinced, by the way, that there will be.
David, how about if you focus on Google here? I'm probably one of those people that said, boy, I think Google is going to fundamentally threaten search as we know it. And the biggest potential loser in that scenario would be Google. How do you view it?
Well, a lot of people worried about that, but that seems so far not to be true. I mean, Google, as the company that essentially invented a lot of the current AI design, the transformers that are at the base of this magical technology, they're in a very good position because they have extraordinarily high quality technology and a very, very good AI model. And they have done an also very good job, in my opinion, of using it to keep their search customers satisfied. The question is not so much, will Google continue to dominate search? There's a more interesting question, which isn't one that investors focus on so much, but as more and more of the Google search users do no longer need to click out of those search results, is this new model that Google has successfully used going to undermine the existence of the internet as an informational resource, because people aren't going to the websites that produce this information anymore? So that's an interesting question, but I think Google is doing extraordinarily well, and Gemini has really risen as close to the top of the pack as anyone for its quality and its reliability.
David, I got to ask you about Meta as well, the company formerly known as Facebook, because you wrote the book on Facebook back in the day, The Inside Story of the Company That Is Connecting the World. We got word from China that their authorities ordered Meta to unwind the takeover, their takeover of Manus, which is an AI startup. China, just like the US, does not want the transfer of sensitive technology to a geopolitical rival. What does that mean for a company like Meta, which for the most part does not grow its own innovation? Oftentimes it kind of copies what others are doing or buys its way to dominance.
Well, in the case of AI, they've done both. They've done quite a bit of internal development, but they've also bought a majority interest in Scale AI and Manus and other companies. This issue of disentangling an acquisition that is essentially complete is a very challenging problem for them, but it's a bigger problem for the Chinese government and for Manus in some ways than it is for Meta, because, you know, if they had to somehow successfully strip out the Manus components, they would continue to be very well positioned in AI. I think it's an open question. You know, it's been widely reported in the last couple of days that the investors in Manus have already distributed the profits that they got from selling the company. So how is Meta going to get back the money they paid? It's a big problem, and it sounds like a lot of money, $2 billion, but with a company that's worth like 1.7 trillion in the markets, it's really not that big, and it's a vexing, weird problem that isn't that big of a deal, in my opinion.
Dave, about 30 seconds left. How concerned should software as service companies be with AI?
That's a really good question. I wish I had the answer. Right now, my gut is not as concerned as has sometimes been said. But the really unknown is how completely is AI going to be able to essentially on the fly reconfigure any kind of software in the future for users based on their needs. If it turns out that the most aggressive predictions are true, that can happen, then really all these software as a service companies will have a serious problem. Yeah. But the data repositories they control are so important. For now, I think they're fine.
All right, good stuff. David, always a pleasure speaking with you. David Kirkpatrick is founder of Techonomy, and of course, he is the author of The Facebook Effect, the inside story of the company that is connecting the world. Paul, we have another red headline here on the Bloomberg that just crossed. The Pentagon says the U.S. government has spent $25 billion on the Iran war so far. About, what, 8 weeks in, 9 weeks in?
Okay, all right, that's the bill that the Pentagon is disclosing here, and I'm not sure where the end is.
That is the big question.
We have a ceasefire, so maybe that's this.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So you can check us out there. Again, we got the 4 big mega tech companies reporting after the close. We're talking Amazon, Alphabet, Meta, and Microsoft. One of the issues is the growth of AI. And we've seen the market really discern winners and potential losers from AI. And one of the sectors that's come under pressure is software, particularly software as a service sector. I'm going to break that down a little bit. We can do that with Neeraj Patel, Senior Software Analyst at Bloomberg Intelligence. Neeraj, I know you put out a research note recently on this, but we saw earlier or late last year, earlier this year, some software stocks, and particularly the software as a service stocks like ServiceNow and Salesforce, really get sold off here. What's your view?
Yeah, I think when we look at the AI disruption to application software, huge market, 700 billion market, but definitely there's winners and losers. And from our view, system of record companies like Salesforce, like Workday, like SAP are in the at least not going to be structurally replaced by AI. Other companies that are in marketing application, HubSpot, Klaviyo, even some of Salesforce marketing, Adobe marketing, they have more pressure there because it's a very heavy language-based, repetitive type of solution that they offer to the clients, which AI is very good at. So we think they're more suspect to being displaced.
The software market is massive. We kind of forget that sometimes because we talk about only the big players, but there's a lot of startups and they're borrowing from the private credit market as well. And I go back to some news from the previous week about a Blackstone fund cutting the value of its loan to a dental implant company. That's, kind of private credit woes continued, but Blackstone also refused to extend a lifeline to a software company, Medallia. And I know that's kind of out of the purview of, the big software companies that we cover that are listed, but I'm wondering whether there's any spillover to the bigger software companies from something like that.
Yeah, I think it's a ripple effect, and I think you've seen this with the valuation coming down. And when we look at a couple valuation metrics, even for the big, large cap companies, they're trading on par with the S&P 500. That's never happened historically. They're trading at 20 times forward earnings, and they have about an 8 to 9% sales growth rate and an operating margin that's on par. And there is definitely spillover from these smaller companies, because what that is signaling to us is the additional growth, which was an additional analytic or AI layer like Medallia was selling, like these other companies were providing, was sitting on top of a base core package. So the additional growth rate is being pulled down because AI is attacking the workflow layer, the analytic layer, the insight layer, which was an upsell and additional cross-sell for these companies.
What can some of these software companies do, I don't know, to protect their business, to defend against AI? What can they do?
Yeah, I think they're taking the steps. We're just not seeing it in the financials, and we're not going to see it for the next couple of quarters. You're going to see this steady low teens growth rate. The gross margin is going to be preserved, but under the hood, they are developing a lot of agents for their portfolios, and that's exactly what they should be doing. They're introducing agents, and they're introducing them quite aggressively. They're not going to charge customers for this additional usage. They want to land that account, and maybe after mid-2027, we expect some repricing of the subscription and the outcome task-based solution. So they're definitely taking the steps that they should be in introducing agent and AI native solutions, but it's just going to be, we're going to have to wait for some type of AI monetization to surface from these companies, which is going to take until mid-2027 from our view.
Neeraj, we were talking earlier about how 4 of the Mag 7 names are reporting earnings after the close. What will you be listening for as it affects your software industry?
Yeah, I think we've been trying to get a handle of, when is the financial impact to the application software and as well as infrastructure software going to take place? It's not there today, as we've stated, and I think as you're pointing out, Scarlett, what do we look at is kind of a little gray, but what I've been focusing in on is what are the building blocks for these agents? And when I look at the building blocks, I see the coding agents, Claude Code, Cursor, OpenAI, Codex. Are the monthly downloads increasing there? Also, some of the other ecosystem metrics like MCP, which is a standard protocol of communication. Are the downloads increasing there? Are the usage for orchestrating these agents? There's some other AI native solutions like LangChain and Crew AI. Is that usage being increased? So as long as that increase is continuing, which is being utilized by these big 4 cap companies, then we think agents are going to come to the enterprise, and it's just a matter of time, and it's giving us a signal that trend's underway.
Neeraj, thanks so much. Really appreciate it. Neeraj Patel, Senior Software Analyst for Bloomberg Intelligence. He's based down there in Princeton, covering the software stocks. Again, software stocks, particularly the software as a service stocks, really coming under pressure as the market tries to differentiate not only the winners in AI, but who might be displaced. And some of the software as a service companies were definitely being sold off earlier this year. So we'll be paying attention to some of the comments from the big tech companies this afternoon. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. S&P 500 absolutely unchanged on the day. The Dow's down 250 points. That's 0.5%. The Nasdaq eking out a little bit of a gain here, up 28 points, 0.1%. Being driven in large part by oil. WTI crude oil up $5.20 to $105 per barrel. 10-year Treasury yields higher by 5 basis points here today, pushing out the 4.39% on your 10 years.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Fed Day morning. Fed Day, of course, really beginning at around 2 p.m., but, we're all preparing for it right now. This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu here with you as we get ready for a busy afternoon. We've got the FOMC decision, and we've got a lot of earnings coming up after the market close. We're going to talk about all of that, starting with Ira Jersey, our chief U.S. interest rate strategist, on the upcoming Fed decision, but also what a Fed Chair Kevin Warsh would mean and would do. Of course, he was just confirmed by the Senate Banking Committee. Now the vote goes to the entire Senate. Anurag Rana is our Bloomberg Intelligence technology analyst, and he'll be walking us through what he'll be listening for when it comes to the 4 Mag 7 names that will be reporting after the close: Alphabet, Meta, Amazon, and Microsoft. Rob Barnett, our senior energy and commodities analyst, will talk to us about oil. Those prices are on the rise this morning, with WTI up 5%. Brent also higher by 5%. We're now looking at $105 a barrel for the U.S. benchmark. And Nancy Tengler, CEO and CIO of Laffer Tengler Investments, gives us her stock picks. First, though, let's go now to Amy Morris for our Bloomberg Business Flash. Amy is in Washington.
You, Scarlett, the entire stock market may be riding on 4 big names today: Alphabet, Amazon, Meta, and Microsoft, all reporting earnings this afternoon. Mandeep Singh is global head of tech research at Bloomberg Intelligence.
There needs to be clear beat and raises, and even a strong beat is not enough. You want to see them show, improving margins when it comes to the hyperscalers.
Mandeep Singh with Bloomberg Intelligence says the Magnificent Seven names could report within 80 seconds of each other right after the closing bell. The Fed's April rate decision also just hours away, 2 p.m. Wall Street time. The focus may be less on the future for rates than on Jay Powell's future as a member of the board after his term as chair runs out in just about 2 weeks. Bloomberg's Michael McKee in Washington.
We know the Fed isn't going to do anything now. They are a sideline, as are pretty much central banks around the world, waiting to see what happens with oil prices, with the war. And don't forget, we've got tariffs coming down the road. So there's a lot of uncertainty about where the economy is going.
Bloomberg's Mike McKee in Washington. Our coverage of the Fed decision and likely final Powell news conference begins at 1:30 this afternoon on a special edition of Bloomberg Surveillance. The Fed decides on Bloomberg Radio and television and the Bloomberg Business app. We do check markets for you all day long here at Bloomberg. The S&P 500 little changed on the downside. Nasdaq little changed on the upside, and the Dow down about 0.5%. 10-year Treasury yield at 4.39% and the 2-year yield at 3.88%. Checking WTI now topping $105 a barrel. Brent crude now topping $117 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. As Amy was just reporting, we got some red and green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon. No, Avalon, what are you looking at today?
Off with one of the top performers on the S&P 500 this morning. That's NXP Semiconductors, ticker NXPI, jumping 25% to hit an intraday record. And that's after the chip maker reported first quarter results that surpassed expectations and also gave a second quarter forecast that beat estimates. Part of that optimism, though, which I found interesting, stems from growing demand from the auto industry as companies look to push more software-defined cars and EVs.
That's what I've kind of joked. I've been going to the CES conference in Vegas for like 30 years, and it used to be actually a consumer electronics show.
Not anymore.
Now it's an auto show, with some, so, and my new vehicle, I just upgraded, my lease expired, so I went from 2023 model to 2026. Even that changed from 3 years, I had to relearn everything.
Yeah.
That's how much it changed.
Well, I mean, a car is
Technology.
now just a tech gadget
Yes.
on wheels.
Yes, it's
essentially.
right. It's my iPhone with 4 wheels, is what I said.
Well said.
And that's a 52-week high for NXP Semiconductors. What's next?
What's next is Wingstop, that's ticker Wing, now falling about 5.8%. That's after the chicken chain lowered its guidance for the full year as those first quarter same-store sales fell below expectations. The results really confirmed investor concerns that customer traffic to the chain has continued to significantly drop off. TD Cowen writing that it was a tough start and that part of the miss can also be attributed to Wingstop's customer base potentially being more exposed to those macro headwinds that we've seen throughout the start of the year. And some are also questioning if the loyalty program will help drive sales back as we head in towards the second half of the year. We'll see, though.
Everyone's got a loyalty program.
Yes.
Speaking of loyalty programs, there's one for Starbucks as well, and you're taking a look at that one.
Yes, that's ticker SBUX, BUX, now gaining close to 9% right now, most intraday since January. That's after the company's second quarter sales topped estimates and it boosted its full year comparable sales forecast. Starbucks largely had U.S. sales to thank for that beat. And interestingly enough, at least to me, the popularity of cold foam among Gen Z.
What?
Yeah, the sales of cold foam was up more than 40% in the second quarter. So looks like
Wait,
that push
that's-
towards protein is working.
That's different from cold brew, right?
Yes. It's like the little foamy top that you have on top of your drink. Instead of whipped cream, you could get cold foam.
Okay. Double short mocha. I've been ordering the same thing.
Now
Since
ask
the
for
first-
cold foam.
Yeah,
Oh, you
now
should.
ask for
That's your
cold foam.
protein.
My first Starbucks I ever went to like 100 years ago was outside the offices of Janus Financial in Denver, Colorado.
Oh.
And I walked in, no idea. I had no idea how to order, no idea.
You told them you wanted a small, and they laughed at you.
Yeah, exactly. I got behind one of those people just Saturday. This person came in and like she had never been in a Starbucks before. So the
Wait, she was
barista
living
had to
under a
take-
rock.
I had spent like 10 or 15 minutes explaining all the drinks, and then we got to the sizes.
Yeah,
Couldn't
which-
forget that.
yeah, I know.
It was
You can't
unbelievable.
explain that.
The line was going crazy. People going nuts. It was very funny to see. Very good. We appreciate that on the stocks on the move. there. Avalon Purnell, appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got the Fed meeting today. Big deal for those who follow the Fed and rates and treasuries and all that kind of stuff. There are people who actually do this for a living. Ira Jersey is one of them. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, what are you going to be listening for from outgoing Fed Chairman Jay Powell? And I don't know, we may get an incoming chairman in the next couple of weeks.
Yeah, I mean, given that Kevin Warsh got through the Senate Banking Committee on a party line vote this morning, it's going to be a done deal that he's going to be the next Fed chair. He'll start in about 3 weeks in that seat, and then he'll take over the helm probably of the Federal Open Market Committee come mid-June and at that meeting. I think Jay Powell, he'll obviously, given that this is likely his last meeting, there'll be a lot of questions about his time as chair. I think on a forward basis, it's going to be, incrementally what other members think and are thinking about the path of monetary policy. We see, with oil prices back up above 100 and the like, I think that will be certainly something that he's asked about quite a lot is what are these pass-on inflationary effects and what it might mean if, it seems like inflation expectations become unanchored.
How much of a language change are we going to see in the statement itself? Because right now, the FOMC has this posture that the next move is more likely to be a cut than a hike. Will they remove that language? And if they do, what kind of signal does that send?
Well, Scarlett, they did take an incremental step back in March, right, toward the beginning of the war, where they became a little bit more balanced than they were in January, right? January's statement was more dovish, and the last statement was, a little bit dovish, but mostly balanced. I think they might take another step toward being completely balanced. And when you look at things like other forward indicators that the Fed likes to look at, such as the Beige Book, the sentiment of the Beige Book, and we have a natural language processing model that looks at, all of the statements within these types of Fed communications. The Beige Book was completely neutral. So I think it's very likely that the Fed will continue to lean that way and basically say, hey, we might have to cut at some point in the future, but it's a long way off, particularly given the current economic environment and our fears and worries about inflation.
What do you think Fed Chairman Powell will do in terms of his term going forward?
It's a good question. Typically you wind up getting Fed chairs typically resign after they finish their term as chair, and they also resign as governor. Now, Jay Powell's governorship doesn't end until January 2028, so he'd be allowed to stay. And it's not unprecedented. There have been a few former chairs that have stayed on to finish out their term as governor. But I think that as long as he's convinced in some way that the Justice Department won't come back and prosecute him when he's a private citizen, that he probably will, take a bow and leave his governorship as well. It'll be interesting to see if that happens and if that transition occurs very smoothly on May 15th, or if he stays on a little bit longer and kind of there's some lingering doubt. I suspect that he would like this to be behind him, so I think it's really in the DOJ's and the White House's purview now to kind of let him kind of go off and do his whatever he's going to do next, probably in academia or in the private sector.
Yeah, retire first and then look at his options after that. Ira, thank you so much. Ira Jersey is our chief U.S. interest rate strategist, joining us to preview the Fed decision and, of course, the Jay Powell news conference. It all begins at 2 p.m., but we will have coverage starting on Bloomberg Radio and Bloomberg Television at 1:30 p.m. with the Fed Decides. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Also, after the close today, we've got a slew of earnings. The argument that Bloomberg News is making is that 80 seconds of big tech earnings is going to decide the stock market's fate. The S&P 500 already holding near record highs, the Nasdaq as well. Let's bring in Anurag Rana, our Bloomberg Intelligence technology analyst, to give us a sense of what he'll be watching for. So we've got 4 big companies, Anurag, reporting today: Alphabet, Meta, Amazon, Microsoft. Which of these do you think has the potential to surprise?
I think all of them should show improvement in growth rates. The surprise could be on the Microsoft side only because last time they talked about their cloud not accelerating as much as they would have liked, or in a sense, if they would have allocated more GPUs to their Azure business, it would have climbed more. The big wild card is, what is management going to do this time? Will they allocate those GPUs again, or will they please Wall Street by reporting a much higher cloud number? I think that's somewhere where we could see some divergence.
So what do you think the message is coming from these big tech companies this quarter as it relates to AI? I'm asking as it relates to spending and returns. How do you think they're going to, how do you think the message should go?
The message should be very clear. A, there is a big opportunity that they have in front of them, which is evident from the backlog they have, or the revenue that they have but not recognized. They have to build capacity in order to recognize that revenue. And for the investor side of it, they need to show that their core KPIs, which is for Google, Microsoft, and Amazon, is going to come clearly from their cloud revenue, and for Meta, it's going to be total revenue. So those numbers need to improve in order for them to show that their story is resonating, that they have a clear AI strategy.
Okay, so when it comes to spending, and this is a question I posed earlier to David Kirkpatrick as well, with CapEx spending, investors tend to be, I don't know, they haven't figured out whether they're comfortable with companies matching what they have forecast or being disappointed when that happens. It's kind of like it's either too hot or too cold. People just aren't comfortable. So where are investors positioned in terms of how comfortable they are with these big hyperscalers spending exactly what they had promised?
So let's say you could take any company in this example. If, let's say, Amazon decides and they want to increase CapEx, they go on and talk about, oh, we're going to raise CapEx for the next 12 months. But their cloud numbers have not improved. That's not going to go well. I think both have to go in tandem, that they are showcasing an improvement in cloud growth rate. At the same time, they're saying, listen, the book suddenly became much bigger this quarter than it was in the quarter before, which is why we are investing. So those KPIs need to match, because you can't just go with one and, you know, that's not going to go well, frankly.
Who's from these big companies reporting up to the close today? Are there winners and losers, or are people doing a little bit better than others, or is it just, I got to own all these things?
Yeah, Paulo, it's a lot about it is timing as well. When we, when the three of us talked about the same thing about a year and a half ago, it was all about, there was only one company showing this AI boost, and that was Microsoft, because they were hosting the ChatGPT app. Now, when you look in the last 6 months, Claude has done really well, Anthropic has done really well, and Amazon Web Services is the choice cloud provider for them. We have also seen, as of a few days ago, OpenAI going to Amazon Web Services and adding their models to their portfolio, which means Amazon now has multiple things to sell. And if enterprise adoption is going up, then they are probably going to be better positioned in the next 12 months. In the case of Microsoft, they have, again, a really good cloud business growing 38%. It's not a small thing, but at the same time, they got to figure out their own model strategy. They have to figure out their own chip strategy. So they need to allocate some resources on that. So there's a lot of, I honestly, everybody's dissecting this in the third degree at this point. Yeah. But if you move back and think, all three of these companies will have much larger businesses 3 years from now than we are today.
Let me ask a very basic question. We keep talking about tech being kind of divorced from the macro and the geopolitical events taking place right now, but are they? Does what's happening in the Middle East affect any of these companies?
So I actually say that tech itself is divided into two buckets, AI versus non-AI spending. But when we look at non-AI spending, it's bad. It's really bad. When you look at results from ServiceNow, even SAP said that if the war continues for another quarter, they will see their cloud growth go down. Now, these are the companies that are not in AI infrastructure play. There are only 6-7 companies in the AI infrastructure play, and they are the only ones who are seeing the benefit irrespective of macro conditions. But all the others, we expect IBM Consulting, Accenture, all of them are seeing that pressure because of Iran, because of the allocation of spend, of enterprise spend from to AI from non-AI work.
All right, who's the genius that scheduled all these conference calls today for 5:30 Eastern time?
Yeah, it's going to be an interesting evening today. I mean, after 4 p.m. and you have to dissect every company in both those three parameters of KPIs going up, cloud spending, as well as the capex. So it's going to be a lot of fun today.
You know, as I was leaving work yesterday out on Lexington Avenue, bumped into Dead Dan Ives. He says, the next 48 hours is going to be...
He had to get sleep like last night in advance of everything. All right, Anurag, thank you so much. Anurag Rana is our Bloomberg Intelligence Technology Analyst joining us from Chicago. And it kind of reminds me of the big bank earnings as well.
Yes.
You know, when big banks start reporting, about 4 of them coming out the same day, but at least they space it out. So it's like 1 per hour, you know?
Right. And then the conference calls don't necessarily on top of each other.
Right.
So again,
they need to spread a spreadsheet around, you know, and just pass along and say, here, what time are you going to report? What time are you going to report?
I don't think they can. All right, very good there. S&P down 7 points, the Dow off 267, and Nasdaq down 12 points here today. Crude oil higher yet again today, $105 on WTI.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. Nasdaq little changed on the downside, and the Dow is down about 0.5%. The 10-year Treasury yield at 4.39% and the 2-year yield at 3.88%. WTI now more than 5% higher, topping $105 a barrel. Brent crude also more than 5.5% higher, topping $117 a barrel. The entire stock market may be riding on 4 big names today: Alphabet, Amazon, Meta, and Microsoft, all reporting earnings this afternoon. We're also waiting for the Fed's April rate decision, plus possible insight into the future of Fed Chair Jay Powell. Our coverage of the Fed decision begins at 1:30 this afternoon on Bloomberg Radio and Television and the Bloomberg Business app. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Thank you so much, Amy. And of course, for once, the focus is not on the war in Iran and oil prices, because we've got so many other things going on. On the calendar, you've got the big tech earnings. You've also got the Fed decision. But oil prices do remain an issue, and certainly it's going to come up in the FOMC decision and certainly press conference. WTI and Brent are both up more than 4%, and the U.S. benchmark is now trading at $105 a barrel. Let's bring in Rob Barnett. He is our senior energy and commodities analyst to tell us more about what he is seeing. Rob, what's the big driver right now? I think everyone has kind of gotten into this this new normal of oil prices will remain higher for longer and the Strait of Hormuz remains blocked up.
Yeah, so I think that the market is trying to ascertain how quickly we're going to see a resolution to the conflict. And I like to think in scenarios. So if you kind of had 3 buckets to put things in, you could have status quo, basically where we are today. One day the strait maybe seems to be open, next day it's closed. You get a little bit of traffic flowing through, but very difficult oil environment. That puts us roughly at where we see crude today. You could see escalation even. We return to a conflict. That could be a bullish signal for prices. And then we have the idea of normalization, which the market seems to think could happen. And certainly if you look at the forward curve, prices out in December or into next year are much lower than where we see spot at today.
So, Rob, when you talk to investors out there, I mean, are they factoring in some kind of longer-term risk premium for the oil coming out of that part of the world, even after the strait is presumably open at some point?
Yeah, it's a good point, Paul. So when we think about oil prices, we entered the year really expecting an oversupplied market, kind of a bearish sentiment flowing through. I think now, given the conflict, you can raise the floor on where you think prices might end up, because even if you get that normalization scenario where things reopen, it's going to take a long time to get back to business as usual. We've really been stressing inventories, and so I think a lot of folks will want to refill and get storage levels back up to perhaps where they were before the conflict, and that's going to take some time. But at the same time, you've got conflicting narratives out there, right? So yesterday we saw the headlines that UAE is leaving OPEC. That's ultimately going to bring more supply to the market once the strait is open and once things normalize. So there are some contrasting signals out there, but at least in the near term, probably the floor on pricing could be elevated versus where you might have been thinking at the start of this year.
Yeah, higher for longer, in other words. One thing that is really striking to me, Rob, is the idea that natural gas prices in the U.S. is below zero if you look at Permian natural gas versus what we're seeing in Europe, which they, of course, have gone up and remain higher. How long can that divergence last for?
Well, this is really leading to a great renaissance in some sense for the U.S., whether you're looking at LNG exports or petrochemical businesses. I mean, the U.S. is very competitive versus Europe or Asia or many parts of the world because we do have this abundance of shale natural gas. And we generally think that, you know, even if you saw some uptick in prices on the gas side here in America, there do tend to be seasonal variations, but we do have a sort of healthy amount of relatively low cost supply. And at least in the near term, I would continue to anticipate a very big disconnect between U.S. natural gas prices and European natural gas prices. And part of that has to do with how Europe has approached its energy policy. It's been prioritizing decarbonization over the last decade and not thinking too much about energy security. Given where we are today, perhaps that's a bit of a mistake, and it's been a good news story for anyone with exposure on the gas side in the U.S. just because we get cheap molecules.
Rob, at $105 per barrel, I'm going to go down to Texas and start drilling some holes here. What's happening with our oil producers? Are they taking advantage of this and ramping up production?
Well, Paul, you've raised a really interesting point. Higher oil prices is really great for folks in the oil patch. And my general sense is we are going to see some response on the production side given where prices are. But you got to keep in mind, this is a boom bust industry, and many folks in the industry, they've got long memories. They know when prices run up, they're worried that there'll be a correction to the downside at some point and they'll get burned. And so there's this tension of, well, cash flow's higher right now, but what do you do with that cash? Do you return it to shareholders, or do you start to let CapEx budgets increase and raise production? I think we're going to see a little bit of a mixed narrative on that. I do not think that the U.S. can fully make up for the Strait of Hormuz being closed. So while U.S. and North America are going to be more dominant, they can't fill the gap completely.
Rob, always a pleasure speaking with you. Rob Barnett is our senior energy and commodities analyst for Bloomberg Intelligence, joining us from Miami. Here with us in studio, as opposed to in Arizona, is Nancy Tengler. She's CEO and CIO of Lappert Tengler Investments. So great to see you in New York with us.
Good to be here. Great
So
weather.
I was noticing and taking a look at your notes that you've been trimming your energy holdings. We're just talking about energy companies. You've been trimming your energy holdings about a month ago. What's your exposure now to oil companies, given what we're seeing overseas?
So we exited EOG Resources, and that was what brought our holdings down. We're still overweight the S&P sector, but we own Chevron, EQT, and we added to Williams during that period. So, our thought was just that we got a great run in the first quarter. We saw some other places to redeploy, and so that is what we did.
Overall in the market, are you surprised at the degree to which the market rebounded off of those initial declines when the war started, where the market just kind of driven back higher?
Yeah, it's like 42 days down, 11 days up. So on April 4th, I wrote a piece that we published on the 6th that said I thought we had bottomed. We may have actually bottomed a little bit before that, but we were in buying on the 7th, which was the Monday. And we added to risk assets. So we added to some of the software names like Palantir and Microsoft. We also added to Starbucks and some of the other consumer discretionary names like Ulta and TJ Maxx. And then we added to GE Vernova, which looked super smart after earnings. It's had a little trouble in the last couple of days, but we're in that one for the long term. So I think we're pretty bullish, to answer the question, Paul. And so we've been using these periods like DeepSeek, like the war, as an opportunity to add to high quality names.
You got out of energy, or at least trimmed your exposure to certain names. What about software? Because not all tech is created equal. So, there's the AI plays and then there's software.
Yeah, it's hard. So we used to have Adobe in our 12 best ideas portfolio, and it wasn't feeling like the best idea. And that was about almost 2 years ago now. So we sold it. And what we didn't see was a management team that was pivoting to the new AI options. Same with Salesforce. Also used to be a member. We kicked it out of both our 12 best and our growth portfolios. And I think those were the right decisions. The one where we've really had to take a big gulp is ServiceNow. I think Bill McDermott's one of the best CEOs in the industry. I think they will be a winner, but you've got a lot of the shorts in there, and until they exit, same with Palantir and Michael Burry, they will ultimately be tailwinds, but for now they're headwinds. And so we've been adding to ServiceNow and Palantir as well.
As we all know, a big afternoon of earnings coming up here after the close. What are you going to be looking for, given that you do have exposure to the technology space?
Yeah, actually, we own all of them except for Meta, all the big players. And we own Apple, which will be obviously tomorrow, most of which are in our TGLR ETF. But I think what I would say is we're going to be looking for monetization of AI. So the knock on Microsoft has been they were capacity constrained. So we hope that logjam has lifted a little bit. We'll be looking at Amazon, which is our favorite in the group at the moment, just because it had lagged. And so has Microsoft, which we recently added to, but we've been adding to Amazon over the last year. I think we'll be looking for advertising there and the Trainium part of the business, and then of course AWS, like everyone else. And we're going to be thinking about backlogs, like where are these companies in terms of capacity, because that will give us information for the chip stocks and for the infrastructure stocks.
That TGLR ETF, by the way, the ticker is hands down like the best ETF ticker, short for Tangler. Nancy, talk a little bit about why you don't own Meta. You mentioned you have all the big Mag 7 names that are reporting today, with the exception of Meta. Why not?
Yeah, we had shifted out of Meta into Spotify a number of years ago and watched Meta go up, but Spotify go up more until recently. I think for me, it's the business model. I don't love it. I don't love the purpose of the software. And I don't really, I'm not a big cheerleader for the CEO, let's put it that way, and the two share business. But mostly it's because it's going to be difficult for them to monetize AI. And so they're going to use it, and they're going to use it in advertising, but they're not going to be one of the pivotal players in our view. So we thought there were better places to be, and I haven't seen a reason to get back in.
30 seconds. Meeting today. What are you going to be looking for from the outgoing chair?
Yes, I'm going to be looking to hear if he's leaving or not.
Right. Yep.
And then I just think, kudos, well wishes, and I don't think we're going to get a rate hike. And I think even though everyone's saying that Warsh is only one vote, we haven't heard that in the past when it was Powell, just one vote. So I think Warsh is a consensus builder, and hopefully we'll hear a very friendly handout.
Do you think Jay Powell will answer the question directly on whether he's going to step down? No? Okay. So he'll continue to obfuscate.
I think so.
All right. Just asking for the prediction markets people, right?
That's great.
Nancy Tangler is CEO and Chief Investment Officer at Laffer Tangler Investments. Always a pleasure speaking with you, Nancy, and thank you for coming in again. We are looking at stocks marching lower right now. The S&P lower by 1/10%. The Dow off by 2/3 of 1%. And the Nasdaq a little change right now. A big day of earnings coming up with a number of big earnings being reported. Alphabet, Meta, Amazon, and Microsoft. And that FOMC decision at 2 p.m. Eastern time, followed by Jay Powell's news conference at 2:30 p.m. Oil prices are higher as well, up by at least 5% this morning. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Chapter. The average couple spends more than $300,000 on health care in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%, Nasdaq unchanged, and the Dow is down 0.7%. The 10-year Treasury yield at 4.39%, the 2-year yield at 3.89%. WTI now topping $105 a barrel. Brent crude topping $117 a barrel. Bill Ackman's Pershing Square going public after raising $5 billion, which is at the low end of its fundraising target. Pershing Square USA shares are indicated to open below the $50 per share IPO price, the company facing questions about what will drive demand in the secondary market. The entire stock market may be riding on 4 big names today when Alphabet, Amazon, Meta, and Microsoft report earnings this afternoon. Bloomberg Tech host Ed Ludlow.
We're bracing for Armageddon, and more than ever, Wall Street is looking for evidence of ROI. They want to see that capital expenditures is followed by boosted forward guidance and tangible revenue growth.
Bloomberg Tech host Ed Ludlow. Look for those earnings potentially within 80 seconds of each other after the closing bell. And we're hours away from what may be the final Federal Reserve rate decision of the Jay Powell era. It comes your way at 2 p.m. Wall Street time. Our coverage begins at 1:30 on Bloomberg Radio, television, and the Bloomberg Business app. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that, as always. Again, it is Fed Day, as Amy was mentioning, and Tom Keene and the surveillance team, John Farrell and Lisa Bronwich, they're going to bring it all to you starting at 1:30 p.m. Wall Street time. 2 o'clock, we get the statement. 2:30, the press conference. Bloomberg's own Michael McKee is in D.C., and he will be at that press conference. So we got you covered there. Let's break it down with Dennis Lockhart, former Atlanta Fed president, joining us from Atlanta, Georgia. I'm going to guess some Peachtree Street or Avenue or Boulevard or something like they do down there in Atlanta.
Way or court.
Exactly. I don't know.
All of the above.
All the above, exactly. Dennis, it's going to be a very interesting Fed meeting today. It'll be the last meeting for Fed Chairman Jay Powell. I guess for a lot of people, the biggest question, or one of the key questions, is what is the chairman going to do once he steps down from his chairmanship? How do you think he'll stay?
Well, we haven't had a decision yet, and I doubt you're going to hear a decision today in the press conference. I think the Chair Powell probably is still deliberating and waiting for some more information. The Supreme Court finding on the Lisa Cook case will be an important piece of it. He may very well not be satisfied with the finality of the decision to drop the investigation by the Department of Justice and be trying to get more certainty around that. So there are reasons why he might may very well hold off on that question for a bit longer.
I'm interested in your saying that the Lisa Cook decision by the Supreme Court might be something that he's waiting for. Just walk us through what that means in terms of the makeup of the Fed's board if the Supreme Court does come out with a ruling. And remember, it has until potentially end of June before it has to come out with an opinion.
Well, it's a fairly complex picture, but in straightforward terms, if Lisa Cook could be fired, it opens up another position. It means that the White House and President Trump can add one more ally to the Board of Governors. That may, in the view of some people, imperil Fed independence. It's a very, very important case because it puts every governor potentially as a target if that governor does not vote the way the White House wants. And you can find some reason to fire that governor, and so they're all in peril, and it just is a chilling effect on the independence of decision making in the committee.
So, Dennis, I guess just from the economics perspective here, inflation, full employment, the war in Iran is arguably impacting the inflation part of that equation here. How do you think the Fed is kind of viewing the geopolitics of the day?
I think they're in a wait and see mode. They want to see if the war lasts much longer, and if so, what effect do higher energy costs have on prices, and are some of those effects more persistent than transitory? There's a lot to learn in the coming months about what the war is going to do to the price level and also the rate of inflation. I think because gasoline is so important to consumers, the committee members some at least, are concerned that the public's inflation expectations could very well be affected by the higher gasoline prices. And inflation expectations is something that economists and the Fed committee members really pay a lot of attention to, because it can dislodge the anchoring of expectations of the public, and that can lead to sort of a self-fulfilling inflation cycle.
Yeah, I think about, and this is something that the Wall Street Journal wrote about as well, the U.S. economy and what it's had to absorb in the last 5 years. You could argue there have been 4 supply shocks: the pandemic and the reopening from the pandemic, Russia's invasion of Ukraine, tariffs in April of last year, and the war in Iran. You could say that these are one-offs at different points, but what is the cumulative effect of one-off supply shock after one-off supply shock over a condensed period?
Well, I think you're suggesting, Scarlett, and I would agree with it, that the overall picture is the U.S. economy has been very resilient to a number of supply shocks. The importance of the term supply shock is it's not something a monetary policy can affect directly. And therefore, the Fed, in setting interest rate policy, really has to often look through a supply shock. And that's one more reason why I think in this particular case, the committee is likely to be on hold for several months.
Dennis, how is Kevin Warsh, how do you think that transition is going to go? How do you think he will put his imprint on this Federal Reserve? Because his candidacy is making its way through Congress today pretty quickly.
Yeah, I believe it's gone from the committee now to a Senate vote, so he will be confirmed shortly, and I think he's extremely confirmable. He's a very able guy, and he has really very good experience. So we've really got a good person, I think, to become the next chair. I don't envy him the tightrope walk that he's going to have to execute particularly in the first year in office, because certainly he's going to be under some pressure from the political side, the White House. And at the same time, he's got to establish himself with the committee. The committee's respect is not just automatic, whoever's in the job. And he's going to have, I think, to assert a degree of independence to convince his colleagues that the decision-making independence that the Fed has enjoyed is going to be preserved under his watch. And if, so he's going to be pulled in two different directions. He's now making a transition, in my view, from someone who was effectively campaigning for the job and got it, to someone who has to be a consensus builder and guide a process in which there are 12 people who vote on policy.
All right, Dennis, really appreciate your joining us. Dennis Lockhart, the former Atlanta Fed president, joining us from Atlanta, Georgia. Dennis Lockhart was the Atlanta Fed president from 2007 to 2017. Ahead of that Fed meeting, we have equities marginally lower.
Yep.
I mean, the Nasdaq is unchanged right now. The S&P 500 is lower by 0.1%. There's a lot of wait and see going on right now.
I think there is. I think you're right. I think it's a wait and see on the Fed, certainly, and on the earnings after the close for some of these big technology companies. Mandeep Singh from Bloomberg Intelligence said, you got to, beat and raise and do it decisively.
Yeah.
Not just a little bit. So, the bar is always high for these companies. So we'll see.
But with the S&P near record highs, it's a lot higher now than it was before. This is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. IPO priced to last night to this morning. That's Pershing Square. It's Bill Ackman's combined initial public offering for his closed-end fund and alternative asset manager, Pershing Square USA. The ticker's PSUS. Initial price of $50. Hasn't started trading it today. Looking at the bid ask in the pre-market, $37.50 to $42.50. Anthony Hughes, equity capital markets reporter for Bloomberg News, joins us here in our Bloomberg Interactive Broker Studio. So first, let's go to this discount that the pre-market trading is showing. Explain to us why this is not unusual, and it does not mean that this is a disappointing deal. It has to do with the structure of a closed-end fund.
Well, it has to do with the structure of the overall transaction, which is quite unusual. I mean, closed-end funds have really lost popularity over the years, and I think mainly because they don't really deliver, returns initially, and they do tend to trade at a discount to net assets because it's really just a pool of cash, and hopefully, the manager in this case will go off and invest that money, and they'll do well over time. But at this stage, it's really just a pool of money, and the manager, he'll be charging a fee on that. So there's not really a lot of reason for it to trade at a premium to the NAV, which is effectively $50 a share in this case. But this is unusual, specifically this deal, because we've actually got two companies listing today. There's Pershing Square USA Limited, which is the closed-end fund, which you've just been talking about. Okay. And then as he structured this deal, he also offered a bonus share in his own management company, and that's also listing today. So this is a little bit confusing for some people, I think, but really this is the way the thinking from Ackman was that due to the inability to provide an IPO pop from the closed-end fund, he thought he'd provide some sort of compensation for that by offering this bonus share in his own management company. Now, that's also going to list today soon, and at the moment, I think the indications are for about, maybe $25, $30 a share. I mean, it remains to be seen here, but if you do your math, you can see that if the closed-end fund trades down, say 10%, and if you bought 5 shares for $50 each, you spend $250. You're losing, if you lose 10%, you lose $25. But you get your free share in the management company, which might be worth $25. So net, you could be quite.
Gotcha. Yeah. So I mean, it's a very interesting, unusual structure. But what people are buying into Bill Ackman and his track record over decades, right? Has he indicated how he may invest some of these funds?
Yes, it's pretty clear how he'll invest. I don't think he's been as clear about it as he could be, but essentially what will happen here is he will pretty much replicate the portfolio he already has, which is a concentrated portfolio, about a dozen stocks. In a lot of the money he already manages is in this European vehicle, which is very similar, although it has a different fee structure. But really, this includes big holdings in, these are some of the holdings which he's well known for, which, his number one investment is in Brookfield, and then he's also got a big investment in Uber, and he's talked about Fannie and Freddie, but also he's got some Mag 7 stocks there, I think Meta, Alphabet, and Amazon.
Okay. The fee structure, what is the fee structure here in the US? Because he's not doing this for free.
Yeah, so the big selling point here from his perspective, in terms of getting people to subscribe to this IPO, was that, he's saying this is the cheapest or the lowest cost hedge fund in the world. And, that's an interesting line, but essentially what he means in saying that is that he's charging a flat 2% asset management fee, and there's no performance fee. So usually with a hedge fund, it'd be or a private equity fund, say for instance, it'd be a 2 and 20, famously a 2 and 20 structure where 20% of the upside or the carry, whatever, would go to the asset management. That's not the case here. So he's really just charging this flat 2% fee. So that's, that's one of the key reasons he thinks that this is attractive to investors.
And it's another revenue stream for him. 2% of $50 billion.
Yes,
that's his revenue stream right there.
Yeah, that's $100 million that goes straight to the management company. And obviously, as I noted, the management company is also listing today. And, how much money he raised through the closed-end fund also affects what the value of the asset management company is, because it's going to be another, he's got really 20 billion of assets under management. Now this adds another 5. So it's a pretty significant lift to his assets under management and the value of his management company, permanent capital too, which, theoretically gets a premium as opposed to open-ended funds where people can redeem their money. So, that's the package that he's put to people. And I think, but ultimately it looks like from the early indications, it's going to be a pretty sort of flat outcome, basically.
Right, for investors here. So presumably, do we know who's buying these initial offerings here at institutional retail? It seemed like an opportunity for retail investors to invest with Bill Ackman.
Yeah, so really a closed-end fund would be, let's face it, more for a retail audience, because institutional investors would, they'd invest their own money. They wouldn't necessarily want this third, this other layer of management to invest in, say, the Mag 7 or whatever. But, obviously, Ackman in this situation. He put together a deal for the institutions. He wanted the institutions to come along. He had a capital commitment for 2.8 billion. So of the 2.8 billion was upfront committed by institutions. And he said this morning on TV that there were family offices and pension funds and other those sorts of big investors, and they were involved. And so really about 80% of the 5 billion has come from institutions.
Okay.
But those people who put in the 2.8 billion up front, they got a little bit of a better deal on the bonus share. They got 1.5 shares in the management company for every 5 shares in the closed-end fund, whereas the new investors who came in, including the retail investors, they got 1 share for every
so a little incentive to be
one
early.
bonus share.
Very interesting structure. We'll see how this thing trades going forward. Anthony Hughes, thanks so much for helping us out here. Anthony Hughes is equity capital markets reporter for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research, your top stories, and global business headlines are coming up in just a moment. We have a red headline coming across the Bloomberg terminal here. Trump says he rejects Iran offer to reopen Hormuz. That's according to Axios. And WTI crude oil trading higher on that news. It's now, WTI is up $6.94, just under $107. This is
From ABC News, I'm Michelle Franzen. The Supreme Court ruling against a key section of the Voting Rights Act. Here's ABC's Stephen Portnoy.
The case was about the drawing of majority black congressional districts in Louisiana. The court's 6-3 holding strikes down that map as an unconstitutional racial gerrymander. Section 2 of the Voting Rights Act survives, but it's now been significantly weakened by the court. The law seeks to ensure that minorities are entitled to equal participation in voting. Justice Samuel Alito's opinion, co-signed by his 5 conservative colleagues, is likely to limit enforcement of Section 2 and help Republicans in their efforts to redraw districts that now include large minority populations.
Top Trump administration officials testifying on the White House $1.5 trillion defense budget. Secretary Pete Hegseth facing lawmakers for the first time since the war with Iran began and pushing back on bipartisan criticism over the war and U.S. goals.
The biggest challenge, the biggest adversary we face at this point are the reckless, feckless, and defeatist words of congressional Democrats and some Republicans. 2 months in, I remind you, 2 months in.
Talks with Iran remain stalled over the blockade in the Strait of Hormuz, driving up oil and gas prices. Former FBI Director James Comey expected to self-surrender 1 day after a federal grand jury indicted Comey for his Instagram post last year of shells in the formation of 8647. Prosecutors allege it was a threat against President Trump. ABC's Jonathan Karl says it's the latest effort by the Trump administration to prosecute Comey.
I've been talking to current and former federal prosecutors who are calling this the flimsiest federal indictment that they have ever seen. Even Trump's allies are privately calling it embarrassing, or as one very prominent former Trump DOJ official told me last night, depressing.
King Charles and Queen Camilla in New York City today, on day 3 of their U.S. visit, paying respects to the September 11th memorial. You're listening to ABC News. Tech titan Elon Musk expected to be back on the stand today in his case against OpenAI CEO Sam Altman. Musk is suing Altman, saying he was tricked into investing in OpenAI as a nonprofit. Here's ABC's Mike Dubusky.
Last year, OpenAI transitioned from a nonprofit business to a traditional for-profit business. They make revenue from subscription services and selling APIs and catering to investors and what have you. Musk says that is basically a betrayal of his trust, and that's why he's taking Altman to court in California this week.
Musk co-founded OpenAI with Altman in 2015, but left in 2018. Altman is also expected to testify. In Texas, while Republicans John Cornyn and Ken Paxton have been fighting it out in the primary over a Senate seat, the Democratic nominee has been making waves.
In the Texas Public Opinion Research Survey, likely general election voters in the Lone Star State say they would back Democrat James Tallarico over incumbent Senator John Cornyn, 44% to 41%, just outside the poll's margin of error. In a hypothetical matchup with Ken Paxton, Tallarico holds an even wider lead, but November is still a long way off, and no Democrat has won a statewide election in Texas in over 30 years. Jim Ryan, ABC News, Dallas.
A new study revealing many Americans are not getting enough sleep. According to the CDC, 30% of adults are sleeping less than the recommended 7 hours a night. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The market waits for Bill Ackman, and we've got him right here on Bloomberg. Welcome to the Wednesday edition as Ackman's Pershing Square goes public today on Wall Street in a combined IPO that priced at the lower end of expectations. Before we turn to politics, the Supreme Court ruling today on voting rights, the wrangling on Capitol Hill, we bring you an important conversation with Ackman himself, and it's going to begin any moment now. CC, let us know, because we want to see the very beginning of this when it takes place as we wait for voting, or I should say voting. It's the political guy here, actual trading to begin in Pershing Square. We actually get to hear from the man behind the operation. With our eyes on Wall Street today, broadly, we'll take a look at the markets with the Dow Industrial Average down 334 points. 34-point loss for the Nasdaq, and the S&P 500 is down 12. Let's go to Danny Berger, now live in New York.
At least 2 years. It's had fits and starts, much like this American IPO market itself. What was it like to get this over the line?
It's great. It's a great day, but it's really, it's the beginning, right? The beginning of a journey.
So it's the beginning of a journey, and now armed with $5 billion. How quickly can you put that to work?
Actually, we think it's a very good time to put the capital to work, and we invest in the most liquid companies in the world. So it's weeks, not months.
So it's weeks. But there's this question. So some of the companies that you own in your other portfolio, for example, Uber, Meta, they've had a good run, and you're already very long them. So the question might arise, is now the right time to be doubling down?
Actually, I think the companies you mentioned are very cheap stocks today. Interestingly, some of the best businesses in the world are trading at the lowest multiples. They've traded at, in some cases, in history. Actually, those multiples bottomed maybe 2 weeks ago, so we're a little bit off the all-time bottom, but very bullish on the economy, and there are some amazing businesses available at really cheap prices. This will be kind of a continuation of what we're doing now. So we're going to just add to existing positions, which will give us more ownership in our strategy. We like to be a big shareholder.
As you said, very, very liquid stocks. So the market is there. What about for like a Fannie or Freddie where they trade OTC? How does that work? How do you dive back in without moving the market?
We're going to be very thoughtful about the way we deploy the capital. We're not going to tell anyone on TV what we're going to do.
I see. You don't want to front run anyone for perhaps a wise decision. And look, you've discussed, you were talking about it earlier this morning on CNBC, that closed-end funds, they trade at a discount to NAV. That's not a surprise. So what does success look like in this scenario? Is for example, like a 10% discount? Okay.
So I want to give you a new construct to think about.
Please.
Okay, so there's hundreds of closed-end funds, but they're a very different animal from what we're doing here. We're adopting the closed-end structure, the legal structure, the corporate structure, because it's the most flexible and most tax-efficient corporate structure in America. It's never been used for the purpose that we're going to use it for. But if you think about our business as a business, think of us as an investment holding company. It's a business that's earned a 19% return on equity for the last 22 years. If you look in Bloomberg, someone should do a search real time. Find me a business that's earned 19% on equity for the last 22 years. It trades for less than 2 times book value. And we're taking the company public at book value. So we think that's going to be a cheap price. Now, the nature of IPOs are such that in the first couple of days, I can't tell you exactly what's going to happen. But over time, we're going to compound this book value, or NAV, as some people call it. If we do anything like what we've done in the past, a high rate over time, and it's going to compound and it's going to grow. And we're going to run it like a real company. Closed-end funds are kind of a backwater. No one's actually wakes up and gets excited about investing in a traditional closed-end IPO. They're kind of generic. You don't know who runs them. I bet Bloomberg's never even run a story. And they don't have conference calls with their shareholders. They don't have particularly distinguished boards of directors. If this were a C Corp, no one would be asking me whether it should trade at a discount or not.
Right.
But you can't deploy our strategy in a C Corp, which is why we've chosen this structure. And it's more tax efficient than a C Corp. It's a flow-through entity for tax purposes. So more tax efficient. And then we fix the things that are problematic about closed-end funds. So it's the lowest cost compensation for a management firm like us to manage this pool of assets. In fact, we charge our other funds incentive fees. We don't do so here. We're not permitted to do so here. So it's the lowest cost version of Pershing Square. You take our record over the last 8 years since we've had permanent capital, it's been a 24.9% return. That's a very high rate of return relative even to the stock market, which is, about 10% per annum, not as well. So it's a liquid way to invest in Pershing Square at very low cost. And we're going to build the value of this entity over decades.
Well, and I know you've said before.
Now, by the way, that's just one of the companies we took public today.
That's true. And you have Pershing Square, the holding company, the holdco, and you also have ambitions to maybe list more funds. How quickly can you ramp up AUM? I know you said just by the nature of what you're doing, by compounding, that you could get to $1 trillion in 20 years. Do you have your own internal targets you're thinking of?
So the first priority is to compound at a high rate for a long period of time. That's a much easier thing than doing an IPO. Right? IPOs can take management time and attention. So we're going to focus on investing. We're going to focus on getting our Universal Music deal done. We're going to focus on helping the administration figure out Fannie and Freddie. We're going to help our company succeed. And the beauty of that is it grows our AUM. And the beauty of this, of Pershing Square, the management company, or some people call it the GP, is it grows with compounding. Other asset management firms generally only grow with raising money. If you look at a KKR or the other sort of alternative asset management firms, if they stop raising money, they shrink because they're constantly sending money back to their investors. As they sell assets, they send money back. In our model, we build off a base, and if we're up 20%, the assets will grow about 20%. And so that's a very fast rate of growth without the need to raise any additional capital.
Can you rival the size of those? I mean, I know it's a very different model, but do you see yourself growing to a size of a Blackstone, of an Apollo?
Over time, for sure. And that was the point I was making. We'll have 25 today, post the closing of this IPO, we'll have 25 to 26 billion of fee-paying assets.
Does the way you invest need to change then? Because
Not at
these
all.
are huge platforms that have many different types of assets they invest in.
Beauty of our strategy, we invest in the largest companies in the world, kind of large cap, mega cap companies, mostly based here. We're tiny in the context of the capital markets. We manage money in a concentrated fashion, but with 25 billion of capital, a couple $1 billion per investment, that's small in the context of the market we invest in.
By the way, and this is quite unique. As you point out, there's not really another structure that's listed like this. How are you thinking about it, though, in terms of having a listed structure, both Pershing Square and PSUS, that it is centered around you and your very small team, which I know is you see that as a benefit too. Does it change how you communicate? Does it change what you put on social media because it could impact share prices?
It does.
Well, I guess legally is one question, but beyond that.
Well, actually, believe it or not, I've been very constrained on social media. I don't know, maybe you find that a surprise. But with respect to talking about Pershing Square, there are a lot of limitations up until this moment in time. Now we have an SEC registered entity. Our existing offshore closed-end fund, we're not allowed to talk about it in America.
Right.
And this is where I spend the vast majority of my time. So it's something we can't talk about. The beauty of this entity is we're going to be able to, we make an investment. We can say today we bought a 10% stake in company ABC. Here's why we own it, ticker symbol PSUS, and invest. We can keep very close touch with our shareholders. And one thing that Elon Musk has done very well over a long period of time is he built a base of followers that were very supportive of Tesla over time, have reduced the cost of Tesla stock. And that's been a competitive advantage that Tesla's had over time. We have already a very large base of followers in the capital markets. They haven't had a way to invest with us until now.
It does sometimes make for more volatility, though, when a post can potentially move around share prices. Sure. How do you think about that?
I mean, we're only going to post stuff that's true. I think
that's a good rule to stand by.
Yes.
At the same time, you've been pretty early in some major dislocations in this market, be it COVID, be the inflation that followed, and some really successful hedging strategies behind that. Do you see any dislocations like that at the moment and hedging strategies you'd want to deploy?
No, actually, I think we're heading into a very good place. Obviously, we have a war still underway, but I think we have by far the upper hand. I think Iran has been, denuded of military capability, and I think it's only a matter of time. Administration, I think, this move of closing the strait, I think, was a kind of a kung fu grip type move on the part of the president, and I think it's putting a huge pressure on Iran. So I think we're going to get this resolved in the relative short term. I think that's really the biggest overhang on the market, right? We close the strait. Obviously, it has an impact. Some, whatever, 4 percentage points or something of oil on a daily basis can move the market, and that has an impact, causes inflation in the short term. But I think it's a short-term phenomenon, and I think once we're through it, I do see, Federal Reserve that should be able to reduce interest rates. We have massive, AI spending. We have massive energy spending. We have a tax bill that's driving investment. Every day there's how many deals that are being announced. We have an administration that's very supportive of transactions as opposed to an FTC, which would stop everything. So I think you're going to see lots of reason to be bullish on markets generally.
You were pretty early in this call, posting on X that any dips would be short-lived, and they were.
I didn't say any dips. I basically called a recent bottom. Let's put it that. I thought stocks were getting stupid and cheap, so I just sort of called it out.
They didn't even sell off 10%. I feel like some people feel uncomfortable with that. I think oil today is trading somewhere around 116, and stocks feel unbothered.
You can't think about stocks. You're thinking about stocks from an index perspective.
Okay.
The index is like looking at the surface of the ocean. The index is like looking at inside the ocean, but the surface is moving around a lot. And what I mean by that is there are, a lot of stocks. There's enormous disparity there's enormous volatility. We have a lot of earnings coming out in the next 24, 48 hours. And you can see massive moves in different directions. There's so much capital leveraged, short-term focused, tightly risk managed, which means stop losses and things like this. And the result of that is that our capital markets, you can see massive moves in share prices. If you have the ability to be long-term, every once in a while, the price of a really high-quality company gets stupidly cheap because someone is forced to sell because of a bad print for the quarter or a guidance change. Really something that doesn't necessarily have any material impact on the long-term business. And those are the kind of dislocations we take advantage of.
But the dislocations, it sounds like, are over. The stupidly cheap moment has come and passed. Is that fair?
I would say we're above stupidly cheap bottom, but I still think there are a lot of very high quality, like the way we sort of model each of our companies, we build a model. And our kind of go forward next 3-year IRR was something north of 30% at the bottom. You don't see that with really high quality companies. It's probably now in the mid 20s. It's still a very high rate of projected return for some of the best businesses in the world. And that's suggestive to me the market's cheap, or at least cheap. This is a case where the highest quality companies are cheap. I'm not saying that energy companies are cheap today.
Sure. So you have to avoid value traps essentially in this market as it stands.
I think that's
true of any
Yeah.
market. Fair enough.
Sure.
In this sort of quest to build a Berkshire Hathaway type model. So you've listed these two.
Let me clarify.
Sure.
Because I think it's a little confusion. So we're building an asset management firm that has some of the similar attributes to a Blackstone and KKR, but it's extremely investment centric. We're going to grow this business principally by compounding as opposed to raising lots of funds. So that's one. Buffett was not in the asset management business. Buffett was building a corporation over time. We have a company called Howard Hughes Holdings. We bought an incremental stake in about a year ago. I became executive chair. Our CIO, Ryan, became CIO. The full Pershing Square team became available to the company. And that's the company we talked about building a modern day Berkshire Hathaway. And the first step we took was we signed an agreement to buy a company called Vantage Holdings. That deal's going to close in the next, call it 60 days, something like this. And we're going to manage the assets of that insurer. And we're going to work with management to make sure they underwrite very high quality, profitable insurance business. If you look at Berkshire over the last 60 years, it's built most of its value running becoming effectively an insurance holding company. That's what Buffett has built over time. And it was his successful management of the assets. So when you heard Buffett buying Apple, it wasn't Buffett buying Apple. It wasn't even Berkshire buying Apple. It was the Berkshire insurance subsidiaries buying Apple. And we're going to do the same thing. We're going to manage this. So the goal of Howard Hughes is to build a long-term diversified holding company akin to what Buffett has done over a long period of time.
In sort of defining what your various holdings and your investments look like and what they're not, I know one distinction you've made very clear, because there have been these nerves around retail funds, but it's been really centered around BDCs and private credit. You've really drawn a distinct line that these are not, there's no exposure there.
Correct.
I wonder if part of that, though, is skepticism of the asset class itself. Is there any skepticism of that asset class?
Of private credit generally?
Yes.
Look, anytime you have an asset class grow very, very quickly with a lot of participants competing, return, you either have to accept lower returns or more risk. That's the only way you can kind of grow in that environment. And there's, like everything else, there's a continuum of quality in terms of sponsorship. I don't think there's inherently something wrong with private credit. I think the one thing I would say is investing in illiquid assets, you really should have very long-term capital or permanent capital.
And here you are on your quest to obtaining more permanent capital.
There's so much capital is managed where the underlying asset is long-term. A company, a stock is a long-term asset.
Right.
The vast majority, what's caused the stock market to behave the way it does is the vast majority of asset management firms have very short-term money. They have money that can leave in a minute, an ETF. They have money that can leave overnight in a mutual fund, or even a hedge fund. When we bulk of our assets were hedge funds, about half the money could leave every year. It's hard to be a long-term investor if your money can leave overnight.
So one of the arguments for that, though, of being able to redeem is just you're accountable to shareholders. How do you keep that? How do you keep accountability to shareholders when they're not able to redeem assets out of the fund?
Shareholders have more liquidity than they do in any fund because they have a stock that trades and they can buy and sell over time.
What needs to go right on the flywheel? Because if you do have any sort of discount to NAV, does that make it more difficult to list other vehicles like this?
We're going to focus on doing a great job for the PSUS shareholders. And if we do a great job, we communicate to them well, we deliver the kind of performance we have over time, we deserve to trade at a premium as opposed to a discount, right? Again, the average closed-end fund, the best performing closed-end fund over the last 8 years generated a 14.5% return. At the time, we generated a 24.9% return. That's a huge disparity. And by the way, that fund trades at a 15% discount. 15% premium.
Do you think you could trade at a premium?
Here's my argument, right? Businesses that earn the kind of return that we've generated over time trade at 2 to 3 times book value. Should we trade it at a discount to book value? It makes no sense. We have a tax advantage, right? We have a favorable corporate structure, much more flexible, much more tax efficient, liquid, listed on New York Stock Exchange. I mean, put aside, I don't know what happens in the first couple of days after an offering, but with good shareholder communication, keep people informed, good performance, this can become a core holding. And by the way, the bulk of this entity is sold to very long-term holders.
Right.
And so now, with so much of the stock held by long-term holders, it's the marginal buyer and seller that will move the price around.
By the way, are you as excited as everyone else is about getting to hear from you quarterly now when you give quarterly updates? Or do you wish it was semi-annually?
No, I'm very happy to I enjoy communicating, and I certainly enjoy communicating with people who've entrusted their future to us.
Yeah.
We actually operate, you're not as aware of this, but today we do quarterly conference calls for our existing vehicle.
Sure.
We're now going to be able to do them onshore.
Yes.
We'll be able to answer questions from shareholders the way that you would want those questions to be answered.
Very much so looking forward to that. Bill, thank you so much for your time this morning. We appreciate it. Bill Ackman, CEO and founder of Pershing Square.
All right, Danny Berger, thank you so much. Fascinating to have that much time with Bill Ackman on this day as we wait for trading to begin under both of those tickers. That could happen at any moment. And of course, we'll have full coverage for you when it does. Made a lot of news here. Set to raise $5 billion, of course, in this public offering today. Talking about it as the beginning of a journey. Really interesting. Said it would take weeks, not months, to invest the proceeds from this offering. And they talked as well about the markets as a whole. Ackman saying that we are above a stupidly cheap market bottom, but still sees a lot of opportunity in the markets here with his goal to build a long-term diversified holding company. Stay tuned for the opening trades of Pershing. which again is a combined IPO. So we're going to be looking at the closed-end fund as well as the management firm, and all that could happen at any time now. Live from New York, Bill Ackman with Danny Berger. Let's check the markets and see what kind of a market Pershing is diving into today. Not too inspired at the moment. Amy Morris has the look for us from here in Washington. Amy, how's it going?
Hey there, Joe, sorry. I was actually looking at Pershing Square, watching to see if it was going to start trading yet. And you're absolutely right. Bill Ackman's Pershing Square is going public after raising $5 billion. We are expecting those trades to begin any time now. But that $5 billion was at the low end of its fundraising target. Pershing Square USA shares are indicated to open below the $50 per share IPO price, and the company is facing some questions about what's going to be driving demand in the secondary market. And the markets are actually kind of holding steady, a little bit lower now. S&P 500 down 0.2%, Nasdaq down 0.3%, the Dow down 0.6%, the 10-year Treasury yield at 4.39%, and the 2-year yield at 3.9%. WTI is now 6.8% higher. It is closing in on $107 per barrel. Brent crude has already topped $118 per barrel. That's about 6.6% higher. The entire stock market also riding on 4 big names today when Alphabet, Amazon, Meta Platforms, and Microsoft report earnings this afternoon. We're also waiting for the Fed's April rate decision, plus any possible insight into the future of Fed Chair Jay Powell. Our coverage of the Fed decision starts at 1:30 this afternoon, Wall Street time. That's about an hour from now here on Bloomberg Radio and Television and the Bloomberg Business app. You can get on-demand news 24 hours a day by subscribing to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thanks a lot. I'm Joe Matthew in Washington. Thank you for being with us here on the Wednesday edition of Balance of Power. We served up a special conversation with Bill Ackman to get us rolling. We turn now to breaking news. It's been a doozy of a day already here in Washington. We were just getting into our editorial show meetings when it hit at 10 o'clock, a ruling that we have been waiting for from the Supreme Court for months, curbing the use of race in drawing up voting districts. This is right down the middle on our program. And against the backdrop of the redistricting effort that's been happening on both sides, right? We had an advantage for Democrats when we came through Virginia, and now we're looking at Florida with a potential vote today that would up the ante for Republicans. Hold on, everybody. That may not matter, as the Supreme Court limits the use of the Voting Rights Act to create predominantly Black or Hispanic election districts, rejecting the Louisiana congressional map with a second majority Black district, calling it an unconstitutional racial gerrymander. And this sets up a whole new test for creating, or I can only assume maintaining, if we're in this age of redrawing maps, heavily minority districts. Jumping on the breaking news, June Grasso, as we would hope, the host of Bloomberg Law, with us now from New York. June, this came along partisan lines. What happens next if not another redrawing of congressional maps?
Well, yeah, it was 6-3 with the Republican conservatives in the majority and the Democratic liberals in the minority. What happens won't happen probably until 2028. We don't know really how much is going to affect the midterms because we're so far along and so many states already have, ballots drawn up, and it might be hard in some of those states to just rejigger everything. But come 2028, it means, according to some estimates, that about, I think it was, 19 Democratic congressional districts with primarily Black or Hispanic populations are at risk. As much as 30% of the Congressional Black Caucus, according to one survey, will be at risk. And we forget, the legislative seats, about 200 legislative seats held by Democrats in the South. So it's going to change things dramatically. It is basically just demolishing the Voting Rights Act, which little by little the Supreme Court has been taking apart. I mean, county case, you remember, they said that, you couldn't have pre-clearance anymore because you didn't really need pre-clearance of certain states, that they would have to pre-clear with an entity before they redistricted. You didn't need that anymore. I mean, put this in the context that the Chief Justice has said that the way to get rid of discrimination by race is to stop discriminating on the basis of race. So you can look at this decision through that lens, where they're pulling back in every way they can on any kind of race conscious decision making.
Okay. So what happens with this second district in Louisiana to start? This is the district represented by Democrat Cleo Fields. The Chief Justice, John Roberts, described the district as a snake. He was talking about the way it actually looks on the map, to be clear, although I found that to be an interesting choice of words here. That map is an unconstitutional gerrymander, Justice Alito wrote, for the 6 conservatives. Does it go away, or do all of these now have to get another look?
I assume that it goes away, but they'll probably have to do it in context. And talking about a snake, I mean, have you looked at the maps across the country in both Democratic and Republican-led states? I mean, the way they draw these maps is crazy. And so having a snake doesn't make much difference when you have like tortoises and other ones and rabbits and different people look at these maps and go, well, what does that look like? Because it doesn't look like anything like you'd think, like a circle around here or a square. Here's where it's been done for ages this way. And the Supreme Court got rid of the ability to challenge maps based on partisanship. So partisan gerrymanders are fine. And now they've gotten rid of basically the way to challenge it based on race. So racial gerrymanders are fine. And, you know, in the dissent by Justice Kagan, which was really, you know, emotional. She talked about the Voting Rights Act being raised on the blood of civil rights marchers. And she said that this is a 3-part plan, and basically it's the end of the Voting Rights Act, and that it will allow states to dilute the votes of minorities. And Justice Alito, who wrote the majority opinion, sort of downplayed it. No, this isn't really a big deal. We're not overruling the Voting Rights Act. But if you look at what he's done, it basically is overruling the important parts of the Voting Rights Act. So it's a mental decision, and it makes the court look more political. And I just want to say that the 6 conservatives justices were at the dinner last night held at the White House, but the liberals were nowhere to be seen.
Yeah, I noticed that. You know what else I noticed is that all the whole lineup from Fox News was there, and I'm pretty sure
you weren't
they were
invited,
not from
Joe.
other networks. I don't know what's going on. I felt like I could have enjoyed the Dover Soul. June, thank you. You got a day in store. You're great, and we'll be listening to an important edition of Bloomberg Law. She's right. Justice Kagan saying the decision renders Section 2 of the law, quote, all but a dead letter, unquote. We're going to be unpacking this throughout the day. And look, we've got a Fed special that starts an hour from now. This will be something that comes back around on the late edition of Balance of Power as we keep our eyes now on Capitol Hill. Republicans cannot agree on anything. We've established that. And it's going to become a problem pretty soon here when it involves Section 702 of FISA. And whether the speaker thinks he can throw this on the floor, they can't get it through the Rules Committee. They also can't seem to figure out a way to fund DHS. Don't even ask about the farm bill because we don't have enough time with Mike Dorning. Let's bring him in right now. He helps to run our Capital Influence team here in Washington. It's been too long. Good to see you, Mike.
As
this
always.
is being described as a conference in dysfunction. Can they get any of these things done?
Well, they've been like punting the ball constantly, and I would expect they'll punt the ball again if they can't get something done.
Get
It's
another
really
10 days or something?
Yeah,
On FISA.
On FISA. It's really tough. They barely have enough Republicans, and they're divided and fractured. And as the election comes closer, they have to worry about facing the voters. And so these divisions over, you know, how much the federal government should be snooping on people without warrants and things like that come up. And it's harder to rally them.
Is part of the problem that the speaker doesn't want to deal with Democrats on this because there'd be a couple Democratic votes to extend FISA, maybe even 10 to overcome the Freedom Caucus, right?
Yeah, the problem is the more he
that's how you get fired around.
Antagonizes the people who keep him employed, the bigger the trouble he has with the next vote. So he's in a tough spot. He's wrangling these people, and unlike Nancy Pelosi, he doesn't have like 10, 12 years of stuff that he may have done for them. And, you know, with her, like another 10 years earlier, raising money for people, he was just thrust into this. And he's got to make the best of it.
I've lost track of how long DHS has been closed. I had it here somewhere, like 70-something days now,
February
right?
14th.
Yeah.
Happy Valentine's Day.
Happy Valentine's Day. So the White House kicked out a memo basically ordering House Republicans to get this done here because without this pass, 74 days, by the way, they will not be able to pay DHS employees starting next month. What are we at? The 29th of April.
Yeah.
Is that a motivator?
It could be once the TSA people stop getting paid again, but some of the Republicans want to do more on this legislation than merely fund DHS and immigration enforcement. So there's kind of a back and forth on that.
Interesting. Okay. Farm bill can't get arrested. I mean, if we can't get this done, how do you get the farm bill done? Or is that another CR or another kicking of the can?
Well, even getting it through the House is they're still got to get it through the Senate, and they can't even get an agreement in the committee on it. So if they kick it down the road in the House, it doesn't really matter because there's no agreement in the Senate on how to proceed.
So there's a question about, does Johnson keep the House in over the weekend? Do you cancel recess in May? Or do we just keep going home with things not resolved?
Well, he's got a judgment to make. As it is, he has a hard time corralling his members. Does he really want to make them more angry at him by keeping them in? There may be a point where he wants to keep them in to try to get stuff done. But if you just make people more angry at you, it could be counterproductive.
Wow. I have to ask you in our 30 seconds remaining just quickly about Kevin Warsh.
Something works.
Yeah, confirmed in committee today. When do we see a floor vote? Do we know?
Likely well before the May 15th deadline. The Senate and the House are both on vacation next week, so they may not get to it this week, but when they come back, they'll probably get to it.
Next couple of weeks. Interesting to see they finally got that done as Tom Tillis steps down. Great to see Mike Borning. Thank you, sir. Look for him on the terminal and online. I'm Joe Matthew in Washington, where we will assemble our political panel next. Rick and Jeannie are both with us for the hour as we walk our way up to special Fed coverage. This is the last one, the last hurrah, the swan song for Jay Powell, and it's all covered here on Bloomberg.
1240 on Wall Street, I'm Amy Morris. A renewed rally in oil drove stocks and bonds lower amid worries that a prolonged closure of the Strait of Hormuz will fuel inflation. And we do check those markets for you all day long here at Bloomberg. The S&P 500 down 0.25%, Nasdaq down 0.4%, the Dow down 0.7%, 10-year Treasury yield at 4.4%, and the 2-year yield at 3.91%. WTI now 7% higher at $107 a barrel. Brent crude now more than 7% higher. It's now topped $119 a barrel, and Bitcoin is down about 0.8%. The entire stock market may be riding on four big names today when Alphabet, Amazon, Meta, and Microsoft all report earnings this afternoon. Mandeep Singh is global head of tech research at Bloomberg Intelligence.
You want to see a clear contribution of AI workloads or AI products to the top line, and then how that trickles to the bottom line. That's where, the job cuts and the cost controls come in.
Mandeep Singh with Bloomberg Intelligence says the Magnificent Seven names could report within 80 seconds of each other after the closing bell. The U.S. has spent an estimated $25 billion on the war in Iran so far. Acting Pentagon Comptroller Jules Hurst provided the most complete public estimate of the conflict's costs so far.
So approximately this day, we're spending about $25 billion on Operation Epic Fury. Most of that is munitions. There's part of that is obviously O&M and equipment replacement. We will formulate a supplemental through the White House that will come in Congress once we have a full assessment of the cost of the conflict.
Acting Pentagon Comptroller Jules Hurst testifying before the House Armed Services Committee. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. I'm Joe Matthew in Washington, and glad to have you with us here on Balance of Power, the Wednesday edition. That means Fed Day. About an hour, a little bit less. We'll turn things over to World Headquarters for special coverage and our Fed special here on what is the last one for Jay Powell. Not clear he's going to leave the building, but as chair, this is it. And as the man who really redefined transparency on the Fed, he'll be holding his final news conference. I bumped into Michael McKee in the newsroom a little while ago. He's down here. In fact, I'm sure he's in the building right now waiting for it to happen. You're going to hear all of that transpire. The announcement, of course, followed by the news conference at 2:30, and you'll hear McKee asking him questions. Mike will join us on the late edition of Balance of Power to talk about it. With big news today from the Supreme Court, we'll get to this in a moment with our panel, limiting the use of the Voting Rights Act. They actually came out with it today. The court rejecting this Louisiana congressional map that had a second majority black district, calling it an unconstitutional racial gerrymander. I'm sure our panel has feelings about this in an age in which we are redrawing congressional maps almost as a hobby now. But we've got a lot of other news to deal with. Remember the idea of a $1.5 trillion Pentagon budget. It was a big deal to get the first $1 trillion budget. Now we're looking for a 50% increase. Well, the administration is. And part of the job in budget season is you have to go up to the Hill. Each cabinet official goes up to the Hill to make the case for their respective agency. And sometimes they face some tough questions that might relate to their purview. And if your name is Pete Hegseth, you're going to hear about a lot. He was up there today with Dan Kane, the chairman of the Joint Chiefs, to make the case for this budget request. Again, $1.5 trillion. And there were a couple of pretty tough exchanges, as you would expect, with Democrats on that panel, not fans of Pete Hegseth, and in many cases, not fans of the way this war with Iran has been comported or transmitted, with any number of lawmakers, D's and R's, saying that they're just not getting the information. And also a lot of questions about, well, what exactly was the motivation? If the president says there was an imminent nuclear attack, how does that rationalize with what he said last year when we bombed Iran and the whole thing he had claimed was obliterated? The top Democrat on House Armed Services, the ranking member's name's Adam Smith. He's a Democrat from Washington. That was his line of questioning for Hegseth today. Take a listen.
Okay, we haven't gotten there yet. For all of the...
Well, their nuclear facilities have been obliterated. Underground, they're buried, and we're watching them 24/7. So we know where any nuclear material
reclaiming my time.
We're watching
a second here. We had to start this war, you just said, 60 days ago, because the nuclear weapon was an imminent threat. Now you're saying that it was completely obliterated?
They had not given up their nuclear ambitions, and they had a conventional shield of thousands
of... So Operation Midnight Hammer accomplished nothing of substance. It left us at exactly the same place.
And he gets to do it again tomorrow. He's back at it, right? They took a break there. He goes to the Senate side tomorrow. That could be even more chippy. I don't know. We'll see what everybody has in mind. But it's where we start our conversation with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are both with us right now. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, I remember you were the first to say on the air, look out for the first ever $1 trillion Pentagon budget. This is probably, a year ago. We're already on $1.5 trillion. And the administration's making the case that this isn't just about paying for ongoing operations. This is about replenishment, number one, and two, catching up with where we already needed to be in terms of our defense industrial base. Do you think they can get this done?
Yeah, I think it's going to be a hard slog. Obviously, the idea of even increasing substantially beyond the $1 trillion level is, a year ago would have been a pipe dream, right? No way, this is way too much. We're going to have to gut the domestic spending. But that's exactly where we are today. Yes, replenishment is a big issue. We've been spending our rockets down considerably, not just since Trump was elected, but prior to that, for the last 5 years, we've really done nothing to replenish our stockpiles of strategic weapons or missiles. So that's a problem, and we need to catch up. And all that costs money, and we're not in the process of cutting budget funds because we're building a new Navy. We're increasing our spend on the Air Force. The Space Force is in full array trying to catch up in space to what China's doing. So it's hard to find a place that you can't make an argument for more spending except for the fact that we don't have the money.
It does appear to be an administration that's hunkering down for something longer. Jeannie, the reporting today is that the president has instructed aides to prepare for an extended blockade of Iran. And we got something interesting today, a price tag. $25 billion is what we have paid so far in this war. We're at 60 days now. And the next 30 are going to be interesting as we approach that 90-day deadline. Will this blockade still be in place by then?
It's hard to see at this point how this gets reopened. Iran has come to the table with a new 3-step plan, if you will, as we sit there and listen to the defense secretary talk about the fact that this is all about Iran's nuclear weapons, and that is our goal, to rid them of not just their weapons, but I guess their ambitions. In that clip you played, we see the Iranians saying, wait a minute, we have reordered the steps. We are now putting nuclear program number 3. First is we get an end to this war and assurance it won't happen again. Second is we get the Strait open where we still have a role in controlling the Strait, and then we'll talk nuclear. So we have an administration that has entered a war with a Strait open and the economy getting stronger. We are now 60 days in, the Strait is closed, and any talk about nuclear ambitions, which was going on when we started this thing, has been moved down the ladder. So it's hard to see, unless they're willing to negotiate on that, where we go forward. And it was striking to hear Ro Khanna ask the secretary questions, and I've been listening to this all morning, and for the secretary to describe the cost, questions about the cost of this war to the American people as gotcha questions. When Ro Khanna, a member of Congress, is saying, what is this going to cost? And he had run the numbers and said it's $5,000 per year per American. The secretary dismissed all that as merely a Democrat's attempt at gotcha questions. And last time I checked, they had an opportunity here to come forward and make the case for this funding. And we have yet to hear it beyond him blaming Democrats as the biggest enemy in terms of what we are facing. So I think it's a missed opportunity on the secretary and the administration's part today.
Rick, I spoke off the record with a Republican senator last evening who seemed very concerned about the lack of briefings, which is something that we have talked about, but also the timeline here, the lack of explanation. And made it pretty clear that we're going to need an AUMF. There will have to be an authorization for the use of military force if this crawls past 90 days. And he implied that there would be, in fact, many other Republicans who agree with him. What's your expectation on that front when we get to 90 days and the congressional response?
Yeah, look, this is not an administration that felt it had to keep the Congress informed on any of its military plans. We've been attacking the sea lanes in the Caribbean to fight drug lords, and the Defense Department, for whatever reason, has just ignored the cries of Congress to come and explain how they have the intelligence to know whether or not these are fishermen or narcotics dealers. We didn't have any heads up on the Capitol Hill on other attacks, including the attacks that leveled the nuclear programs in Iran. So it's a long list of, I would say, ignoring Congress. And as you point out, Joe, that bill comes due by the end of the 90-day period in this war. Congress has an obligation to address this, and nobody wants to touch it. It's a hot political issue, but they know they have to, and they're just begging the administration, please, help sell this for us. Don't just give us the highway. And It didn't help when Hegseth started out his opening statement by basically saying the biggest threat to America are Democrats in Congress. I mean, that's not the way you're going to get a positive response.
That's literally what I heard last night, Jeannie. He said, help us sell this. You might only have 30 days to sell it, so let's get it started, because the Republican membership in the Senate and the Republican conference in the House support this effort. They need to go home and sell it, though. Will they have the administration at their side?
They should have started today. I mean, to your conversation, Today was a day. I would argue we're 60 days, 90 days late on doing this, but never a moment to waste. They could have done it today. As I just mentioned, Pete Hegseth went in there aggressively. He's very concerned about what representatives are saying on television, calling the war a quagmire, sort of ignoring the American public and the polls, which show this is widely unpopular. And it's unpopular for a lot of reasons, but one is that they have done nothing to sell it to the American public or Congress. And I am reminded of Cap Weinberger's doctrine. The fifth of the 6 steps that you need to go through, according to that doctrine, before you enter a war, is you need to ensure that you have the support. That is the support of the American public, the support of Congress, not to mention our allies. The administration has completely ignored that. And so what we're hearing today, because they didn't have a debate for authorization of this war, that debate is happening now when they're up there asking for more money to continue this. So they are coming from behind. And again, it is a missed opportunity at the hands of this secretary today.
Look at oil prices today. Crude oil now almost $107 in New York. WTI is up 7%. Brent is also up 7%. Now above $119 a barrel. Gas prices, what did I see? I got to look at this again because I don't even trust myself anymore. $4.23 on a national average. Rick, you heard the story I mentioned about oil supplies, oil storage, I should say, for Iran. They're running out of storage. They're starting to load it onto ships because they can't keep it in the ground. And at some point, it's going to be a problem. They have to, in the next couple of weeks, probably start closing wells. Is that the strategy here? If Trump is telling aides to prepare for an extended blockade, is that the way this ends, that we simply wait them out so they can no longer produce oil?
Yeah, I think that the president has figured out that he can't bomb them into submission. That was the first 3 weeks of this campaign, and it didn't turn out that they were ready to surrender as he required them to do. And so now I guess it's choking them out economically. I think everybody is all sort of on board with this nacho strategy. Not a chance that the strait opens up, and so, yeah, I think that this is just the second phase of the campaign where now it's an economic game. There are a lot of people I've talked to who are experts on Iran and the region who just don't believe that you can, create a scenario in Iran that will bring them to the table where their nuclear program is willing to be discussed first. And so we, I think, are in for a long slog on this one.
The nacho strategy? I had to Google it. This is all right. I'm catching up on this one. Not a chance Hormuz opens. Not actually committed, humiliated overseas. Never avoids confronting hard obstacles. I think he meant not a chance Hormuz opens. The nacho. Who needs a taco when you got nachos? Rick Davis and Jeannie Shanzano stay with us. We'll plow into our second hour as we count down to the Fed. Thank you both for a great panel. We'll talk about the Fed and the confirmation of Kevin Warsh coming up, happening on the same day here on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's Jay Powell's last meeting as chair, just as his replacement clears committee. Welcome to the Wednesday edition, Fed Day, with an announcement on interest rates now 1 hour away, followed by Powell's final news conference, with the Senate Banking Committee voting today to approve Kevin Warsh as the new chair. We're going to get the latest in a moment from Stuart Paul at Bloomberg Economics with insights from our political panel today and from Republican Senator Shelley Moore Capito of West Virginia. It's the fastest show in politics today. We've got special coverage starting in just a half hour. We start, as always, by setting the baseline on Wall Street. Let's turn to the markets. Here's Amy Morris.
This Fed decision amid mounting concerns that Any elevated energy prices are going to curb the potential for interest rate cuts this year. We do check markets for you all day long here at Bloomberg. S&P 500 down 0.25%, Nasdaq down about 0.4%, the Dow down 0.6%. 10-year Treasury yield at 4.39%, the 2-year yield at 3.91%. Now let's look at oil. Both WTI and Brent crude are more than 7% higher. NYMEX crude oil now topping $107 a barrel. Brent crude topping $119 a barrel. Investors looking for clues on which direction the stock market will be headed in the coming weeks. They'll be getting a rapid fire reading as soon as trading ends today. 4 of the biggest companies in the U.S., Alphabet, Amazon, Meta, and Microsoft, are going to be reporting their earnings after the bell. And if they all hit at the same time as last quarter, it should all play out within just 80 seconds. We're buckled up. The Fed's April rate decision is about an hour away, 2 p.m. Wall Street time, but the focus may be less on the future for rates than on Jay Powell's future as a member of the board after his term as chair runs out in just about 2 weeks. Our coverage of the Fed decision and likely final Powell news conference will start about 30 minutes from now on Bloomberg Radio and Television and the Bloomberg Business app. And of course, we are watching for Pershing Square Holdings to start trading. The ticker is PSUS. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power now with Joe Matthew.
All right, Amy, thank you so much. As we count down to our special Fed coverage less than a half hour away, we've got some important news in Washington with a pretty quiet day now that the king has left town, making his way to New York, in fact, where he's meeting with Mayor Mamdani at the 9/11 memorial. The Supreme Court takes our attention with an important ruling today that we have been waiting weeks and months for, limiting the use of the Voting Rights Act to create predominantly Black or Hispanic election districts, rejecting a Louisiana congressional map that had a second majority Black district, calling it an unconstitutional racial gerrymander. The decision along ideological lines, 6-3. We are also watching the confirmation process, and this plays right into our discussion about the Fed today. Kevin Warsh, he cleared committee just like that. It was less than a week ago that Tom Tillis dropped his objections after the DOJ dropped, if I can use that word, or transferred its investigation into Jay Powell from DOJ to the Fed IG. Tillis dropped his blockade, and just like that, Warsh, as expected, clears committee. The question is when he will see a full confirmation vote, and many expect that to take place on the floor of the Senate by the end of this week. But today, it's about the matter at hand and what it's going to mean for Jay Powell, his final meeting as chair. And I'm glad to say that we're joined by Stuart Paul, of course, Bloomberg Economics U.S. economist. It's great to see you. Just as I introduce you here, Stuart, red headline on the terminal, Brent rises above $119.50 a barrel, the highest since June of 2022. How difficult, before I ask you about Jay Powell's swan song, is this war in Iran, reaction on the energy markets, going to make it for the Fed to ever cut rates?
Well, so the war in Iran creates two-way risk. Of course, it almost mechanically boosts inflation acting through gasoline, but it also weighs on real household spending growth. I expect that we're going to end up seeing some dulling real spending, especially in the second quarter. Given the fact that the Fed cannot do anything to bring additional barrels online, I wouldn't be surprised to see the Fed become a bit more attentive to downside growth risks in the future. I think that even as oil prices stay high, we could see the door open for rate cuts if we end up seeing further deterioration of the labor market and, again, that downside growth materializing.
Okay. Really interesting. Headlines, by the way, crossing the terminal on Pershing Square. Easy for me to say. We're waiting for the initial trades of this combined IPO. Pershing Square USA now indicated at $32.50 to $37.50 with an IPO price of $50. Pershing Square Inc. indicated to open at $19 to $22 each. When this crosses the screen, we'll, of course, let you know. What's Jay Powell going to say today about the way forward? We don't expect any change in rates. What's the statement going to read?
I expect that the statement is going to acknowledge the downtick in the unemployment rate that we saw in March. So if you were to describe the labor market as solid, if the statement were to describe the labor market as solid, for example, that might be an incrementally hawkish change to the statement. If we were to see any sort of any sort of additional emphasis put on well-anchored long-run inflation expectations. Again, just hinting that the committee as it currently exists has no intention of cutting rates in the near term. I expect that those are going to be the sort of changes that we're going to see. Again, there's so much uncertainty. Policymakers are just going to have to acknowledge that and really lean into uncertainty to maintain to keep their options open.
Move on to the news conference. All anybody's going to want to talk about is him, right? I mean, I guess they're going to want to talk about policy as well, but it's going to be, what are your future plans? Does he tell us today? Do you think when he plans to stay, when he plans to leave, I should say, or if he's going to stay once Kevin Warsh is confirmed?
I don't think he's going to break any news about his future plans today. I think he's going to be pretty precise and vague. And so I expect that, again, this is going to be the first question we're going to get. It will probably be 30% of the questions we get at the press conference. And I expect that he's going to start by saying that he's there to represent the views of the FOMC. He's not there to make any personal announcements. I imagine that he's going to acknowledge that Kevin Warsh's nomination still needs to be debated on the Senate floor. It still needs to be voted on the Senate floor, so it would be premature for him to announce any sort of decision that he's made. So we're going to really need to focus on some of the code words that he might bring up during his press conference. For example, there's a difference between saying that he wants to follow the precedent of former Fed chairs, which would hint that he'd be willing to walk away from his board seat. There's a difference between that and saying that he wants to facilitate a leadership transition, for example. Like, to me, if I were to hear that, that would be a hint that he'd be more inclined to stay into 2028.
Okay. Stuart's got the decoder ring out. There was a question, one of the tip sheets this morning, if he just goes YOLO and starts saying everything he ever wanted to say about Donald Trump, but that would be a bit out of character, I'm guessing. You mentioned Kevin Warsh. Stuart, let's go back to the committee, the hearing that was held for his confirmation before Tom Tillis dropped his blockade, if you will, knowing that Warsh was confirmed today. Let's go back to the banking committee hearing. Remember Elizabeth Warren? Listen.
Trump is still going after control of the Fed, and he is keeping the threat of bogus criminal charges alive until he gets what he wants. These are uniquely dangerous circumstances to advance any Fed chair nominee. But Mr. Warsh is uniquely an unfit candidate.
It's no secret that the reason that Mr. Warsh's nomination could have been held up was because of my concern with the investigation. I want to thank the Department of Justice for the assurances that they gave me. I've got confidence that this investigation is over. And I think that Senator Warren, I get that she wants to score some political points, but she is flatly wrong on every point she just tried to make.
That'd be Tom Tillis right there, the senator from North Carolina who held this whole thing up, and knowing that he was a Kevin Warsh supporter. We could see a vote, Stuart Paul, on the floor as soon as this week. What will the Fed look like once Kevin Warsh is in the building? What will it mean for the culture in the building and his ability to achieve consensus?
Well, so first things first, he'd be replacing Stephen Myron on the Board of Governors. He would then be chairman of the board. I think that a lot of the folks in the a lot of the staff are going to be a little bit nervous. This is Kevin Warsh, who has said that he is in favor of institutional reform. He's in favor of cracking heads if need be. And so I imagine that he's not going to receive the warmest welcome from the staff. But then again, he's the guy who's going to be in the driver's seat. He's the guy who's going to be setting the agenda for board meetings. He's the guy who's going to be determining what interagency rulemakings he wants to consider and whether that could lead to deregulation of the banking industry so that he can achieve the sort of balance sheet reduction he wants. So I imagine that it might be a little bit of a culture shock for staffers, and I imagine that Kevin Warsh, when he walks back into the building for the first time in several years, I think that this is going to be a Fed that he perhaps struggles to change its course.
Interesting. I just saw Tom Keene walk by behind you. He must be on his way to the studio, so we're getting close here. The T-Rex of financial news is in the building. Stuart, it's great to see you, as always. on this Fed Day, no less. Stuart Hall with us live from New York. Let's assemble our political panel because the politics are pretty involved here with all of this when we consider the impact of the war in Iran, the pricing pressures that consumers are facing. It's a huge conversation on Capitol Hill, much like the confirmation of the new chair. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. There's Rick Davis, our Republican strategist and partner at Stone Court Capital. Jeannie, what's the swan song going to sound like for Jay Powell when he stands before reporters today? Does he play it straight?
You know, I think he will, but I know many of us are hoping he does like an un-Powell-like thing and really lets us know how he feels, as to your earlier point, but I seriously doubt it. You know, it's interesting to listen to Senator Tillis, though. He says he has a lot of confidence this investigation is over. And we are sitting here, you know, not 24 hours after they indicted Jim Comey on seashells that he took a picture of a year ago. And I wonder, do you think that Jerome Powell feels quite as confident as Senator Tillis that this investigation is over? Or does the Department of Justice come roaring back? Because, of course, Todd Blanche is, you know, aiming to be the Attorney General, not just acting. He is performing for an audience of one, and he is indicting a former FBI director for seashells. So, you know, I'm not sure if I'm Jerome Powell that I would feel quite as confident this thing is over, because apparently the retribution tour continues.
Well, I mean, if you just go and look at the statement from Judge Janine, she made it pretty clear that if this Inspector General report turns up new information, she could reopen this investigation. Rick Davis, I'm guessing Jeannie's implying that Jay Powell might want to stay around for a while. Do you agree?
Well, first of all, it makes me laugh. You call her Judge Janine, U.S. Attorney Bureau. But I made the same mistake earlier today, so I applaud you. Yeah, look, I mean, the safety play here is stick around, right? You know, use the cover of the Fed and the lawyers of the Fed to defend yourself. And I would point out, I mean, you know, Chairman Powell did a video pushing back directly at the president, and he was first attacked by the Justice Department. This guy has not held his breath when it comes to fighting for Fed independence and his own credibility. And so I can imagine when he is replaced by Kevin Walsh as chairman, it may be a liberation moment for him, especially if we're right in that, like, the Department of Justice decides to continue to harass him.
Yeah. Are you optimistic about Kevin Walsh? Jeannie, I'm not sure where Stuart Hall left that with us, but he implied that he might not be terribly popular when he gets in the building. I guess Myron's going to have to figure out what to do in the meantime, because if Jay Powell doesn't leave, he might have to find another job. What will the Walsh culture look like?
That's right. I mean, I think to the earlier point, there is a lot of concern. You know, there is no question he is eminently qualified for the position, but things that he has said, and I think in my mind, even more importantly, just like Todd Blanche, the fact that so many people that Trump brings into any position, even one that is supposed to be independent, people feel beholden